So I was sitting in front of like 15 people who would be, potential investors. And it was the day that Bitcoin rose some absurd percent. And while I was sitting in this meeting, talking to these people for like 2 hours, it went up like $2,000. And I remember driving home and I started thinking, this is irrational. Even for me, I'm 100% into this, quit my job to try and get into this. And this is not healthy. This is not safe.
Hey everybody, welcome to episode 89 of the Andrew Deitch podcast. Hope everyone is doing well today. Today is Tuesday. This past week has been pretty weird for the podcast. I've been doing a ton of video editing this week, and it seems like it's been a week of just technical difficulties. I don't know what the heck is going on, but if this is your first time joining me, thank you. First of all, it really means so much that you would be here. This podcast is all about conversations and sharing the amazing stories of people who do amazing things, entrepreneurs, creators, athletes, doctors, and we sit down in person to have an awesome extended conversation about life, the future, psychological stuff, much more. And I absolutely psychological stuff, and much more. And I absolutely love recording these podcasts. It's one of my favorite parts of doing this whole thing and making this whole thing come together. So it is really dope to have so many people supporting and listening. And this episode is not a sponsored episode, hashtag non-spons. So this episode's on the house, but never fear, my sponsors will be joining us soon again, and I'm hopefully going to be having a pretty new sponsor here in the next couple of weeks. But as always, once I come back with the ads, I'll be leading with value first so that you hopefully learn something instead of just me reading some boring ads. So let's just jump right into the show. My guest today is my friend and ADP veteran, Zander Yost. And Zander and I have been friends since we were 10 years old. He's hands down one of the most unique and unforgettable people I've ever known. But he was an all-star football player in high school, and then he got recruited to play at the Naval Academy. And after suffering an injury, he went to play at Georgia Southern. And last year, he quit his job that was paying him 6 figures a year to start a hedge fund centered around the future of cryptocurrency and blockchain technology. And if you want to hear that full story, you can go back to episode 66 for more. But over the past few months, it seems like a lot of the buzz and the hype surrounding Bitcoin and cryptocurrency has been dwindling, and Zander has been getting a lot of questions from everyone about what to do and what the future holds. So he wanted to come back on the show to talk about what has been going on. And I love talking to Zander, so of course I wanted to have him back on the show. So without any further ado, please welcome my friend, Zander Yost. Live, Zander Yost. How's it feel?
It feels good.
Good. So if people have listened to the podcast before, you may have heard Zander's story. You may have listened to the longest podcast of all time.
Gosh, that was so ridiculous. Even I went back to listen to it and I was like, dude,
this is long.
Wow, this is long. Like, I mean, it wasn't a surprise to like knowing myself. I was like, I talk a lot, but
yeah. No, it was actually really good. I got a ton of positive feedback from your episode, seriously, because like a lot of people that knew us and haven't like talked to us in a long time.
Yeah.
It was like a cool way to catch up, and then also for people that didn't know either of us, it was kind of cool just because it was like old buddies just talking about old times and shit. Like it was.
Yeah, that was funny. We had a bunch of like, oh yeah, I forgot about that.
Yeah,
so
for sure.
Cool. That was
for sure. But anyway, so. Zander hit me up a few days ago, and basically the gist of your message was saying that a lot has changed in cryptocurrency over the past few months, and even just since we did our last podcast in December, and it's the middle of April 16th, so even in just like 4.5 months, it's changed a lot, and you've had a lot of people like reaching out to you.
Yeah.
Really curious. But before we dive into all that stuff, just so this can be kind of like a standalone podcast, people don't want to go back and listen to the 3-hour long podcast that we did before, just kind of give us like a recap of like what you do currently in that space, just so people kind of have like an idea.
Okay. So right now, I'm still in the process of building a cryptocurrency hedge fund. and I don't necessarily like even really using the word cryptocurrency, because when I'm explaining this or selling this to anybody, we try to avoid that word in particular, because it is kind of hard to explain what digital assets are. But essentially what we're trying to do, it's me and 2 other guys, and then we have a back office of another group a company that will hire in that works out of Atlanta. But essentially our objective is to create a traditional, transparent hedge fund model that people that are in their like prime income years and prime saving years. So, the late stage Gen Xers and our parents age people who like, have expendable income.
Like at the end of their 50s probably.
Sure, right. So, I mean, majority of the people, just the individuals that we've targeted as, our potential investors are people that want access to this space or want some sort of alternative asset that they want to own. And have heard of Bitcoin and don't really maybe not know anything past that, or somebody who wants like a full suite of options.
Because it's pretty common, I feel like, when you're thinking of investing, you're like, oh, I want to, traditionally it's like, oh, I want to invest in the stock market, but I know nothing about that. So like you'd hire someone to invest your money or whatever.
So right, exactly. So we're essentially full-time diversified portfolio managers of different digital assets, cryptocurrencies, distributed ledger technologies, whatever you want to call them. Our whole goal is to create basically a mutual fund of a certain amount of proven cryptocurrencies that are both diversified, just the way that they're allocated and then distributed on a percentage scale, but then also like on different exchanges.
Gotcha.
So we're money managers is really all that we are, but it doesn't really fit the role of money managers or hedge fund. So it's just it's a very interesting, unique space, but we kind of have to use normal words to make it explainable to people.
You have to explain it.
So yeah, we're building a hedge fund to manage people's crypto investments.
Yeah, and diversifying obviously is super important, especially in crypto, because if you put all your eggs in one basket,
that's gambling.
Yeah. It is gambling. And see,
because even if it's an educated guess, it's still gambling.
And see, that's why people there a lot of times they're like, oh, I'm a day trader or whatever, and it's just like, it's really. I mean, you can get lucky for a while, especially when the markets are good. It's like, you can make money doing that kind of stuff, but being able to predict the markets effectively, like, is definitely challenging.
Super challenging, and then that's the to be able to make what separates us and what makes us sort of unique, and why I'm so passionate about building a business is very, very difficult, and that's something that like we can talk about. But a lot of people like that I've listened to, other people on your podcast have spoken to how difficult it really is, and lonely and stressful and all that to build a business from scratch. But on top of that, doing anything in the financial world without years of experience for one, or, a certain amount of certifications and other things like that is extremely difficult. And like even, talking with other hedge fund managers, and one of the ways that I've tried to build our own business model is like looking at what other people do. But I've talked to a bunch of hedge fund managers and a few who manage unspeakable amounts of money. Like I thought our whole goal initially was to raise $10 million. And I thought that was like shooting for the moon. Like that's not, because I thought, shoot for the stars. And if we get to, $1 million or $2 million under management, like that'd be awesome to start.
Yeah, for sure.
And, but I thought it's possible that we could get to 10, but I thought that was just a ton of money. And then you start talking to people, 100 million, 200 million, 500 million. I talked to a guy, that manages a $13.5 billion fund.
Holy shit.
Which is, it's
That's
the same.
Insane.
And with this, I mean, they have a huge, much, much larger back office team of researchers and, compliance people and all that stuff than we'll have. But still, the managing partners are like 3 guys.
That's pretty crazy.
Like, so traditional hedge fund models are 2 and 20. And that means the management, it's actually 2 companies usually. So a fund is managing partners is a 1 company. So that's an LLC. And then the other side of it will be limited partners, which is just LP. And those are, quote, silent partners. Those are the people who are the investors. They're partners by putting their money in it, but the management company manages their money. They have no authority to actually like do anything with the money other than give it up. But most hedge fund models work on what's called a 2 and 20 scale. So 2% of the principal investment is what you pay yourself with and pay for your overhead, all the back office and the like tax and compliance teams and stuff like that. But it's also usually what the salary is. But then performance is 20%. So if we were to take somebody's $1 million investment and turn it into 2, we would make 2% of that million. So we'd make 20,000 as the principal, but then potentially 200,000 if it performed that way. So that's how. But you're managing $13 billion. Think about that. 2% of, I mean, that's $260 million.
That's gnarly.
Is 2%.
That's so gnarly.
So one of those kind of funds, the really, really large family office type of funds and pension funds, is what I'm starting to gear my attention to in terms of sales, because in order to get people involved in this stuff from an individual basis, it's still super, super, super early in the overall stage. Maybe not with Bitcoin or anything like that, but as a industry, it's still very, very early days. So for an individual to be also with expendable income to get into a hedge fund, because usually most people walk into a hedge fund spending at least like 50 grand or 100 grand just to even have a stake.
Yeah,
because most people will come down
at the table.
Right. So you're dealing with people who have, if 1% of their net worth is 100 grand, like these are pretty wealthy people.
Yeah.
For the most part.
For sure.
So most of them are 9-figure wealthy people. So, finding the ones that really know this technology and understand the future implications of it is few and far between at this point. But like money managers, people who manage people's money for a living like we do in all spaces, those are the people who I want to start targeting, because they have access to some of these funds. 1% of their fund would be 100 times more than we need just to even get started. So for these guys, if they were able to allocate a 1/1000th of their fund, it's still 1.3 something million dollars. 1/1000th. That's insane. So and we're trying to encourage people.
It's hard sometimes to like think about. You're like, $1 billion, and you're kind of like, that's just one step above $1 million.
It's 1,000 million.
1,000 million.
Right. Like it's one thing to conceptualize absurd. How much, like, to actually see on a metrics, like what that looks like physically.
It's absurd.
It's insane, dude. Like $1 billion. $1 billion, I think, is like an 18-wheeler full of $100 bills. Full. Like, and I might be wrong on that. Maybe that's 10 billion or something.
And the crazy thing is, too,
whatever
people
it is, it's ridiculous.
Like people, when people are like, wow, $1 million, you can fit $1 million in like a briefcase.
Well, think about that. Like, if you had $1 billion and you were putting it into pretty safe, growable accounts, making 6-7%. 6-7% is
those are good odds.
Millions and millions of dollars.
Oh yeah.
So I think that's one of the things that a lot of people our age specifically, because we just aren't at that earning years yet. Yeah. We don't really put it.
I'm like, how much is rent? $500.
Oh sure. Well, I think there's a saying, like, so Albert Einstein's like one of my, like, he's like I love a lot of the stuff that he like wrote, and also like a lot of the stuff that he did, but at the same time, like, he was obviously he was an intellectual person, but he actually talked a good bit about like finance, not from like a strategy standpoint, but just like a macro look at it. And he was like, he's noted as saying the eighth wonder of the world is the man who understands compound interest, and the one who doesn't pays for it. Like, basically saying, I don't think people, and this is like to this point, I don't think people understand how much money makes. Because it makes money. That money works 24 hours a day. Doesn't.
And that's why the rich get richer, the poor stay poor kind of situation. A lot of times, because there's multiple factors, but
there's multiple factors, but one of them is purely math.
Exactly. No, it really is, because like you said, it's like when you can allocate when you can allocate resources to something,
right,
and they can pay you back,
exactly.
It makes total sense.
Yeah, and understanding how the world works, like and that's honestly what's on a macro scale what this technology actually represents too, is like the reason why it's such a big deal in my opinion is because it really does take a lot of what we know as the normal way things work and flips it upside down. But like, yeah, I mean, the ability to understand like exponential growth is like massive, because that's how I had a gym. He wasn't a gym teacher. He was like he was the athletic director of our. I don't know why I almost said gym teacher. That'd be so disrespectful to him. But he was the AD at our school. He's an incredible man at Wesleyan. But the guy's like probably a multimillionaire, never making more than 75 a year probably, but like for 20 years, just the same accounts were put. Like he just invested his money very well, not like strategically, just like in safer.
Yeah.
Exponent, like, because
for sure, and like living below his means and all that kind of stuff.
Yeah, exactly. But yeah, just over the course of this last year, but especially in the time between the last time I was on the podcast and now, just the amount of stuff that I've learned and had to learn the hard way about how certain things work, is like, it's a lot, but it's good though. So
cool. So let's talk about the dip.
The dip.
So for people that are listening and they're not super familiar with crypto and all this stuff, maybe that it's the first time, whatever.
Right.
I'll try to explain it and then you can try to correct me. So basically, back in September, October, November, December, massive hype wave surrounding cryptocurrency. People's grandmas were freaking talking about, sitting around the Thanksgiving table like, hey, what's this thing, Bitcoin? I've got some money laying around, Grandma. We need to invest in Bitcoin, blah, blah, blah. So it's like there's this massive wave of hype surrounding Bitcoin, and Bitcoin, it capped at like $19,000 per Bitcoin, right? Yeah. That was like the peak. And lots of speculations were saying it's going to tank. Some speculations were saying, it's going to go even higher. We're going to break that. Once we break that $19,000 ceiling again, it's just going to exponentially shoot up now. So like even at, it's sitting at 16, buy in, because it's going to just shoot up again. We're going to have another hype wave. Right. And it kind of just fizzled like over it. We never really had that big jump up again. And now it's sitting at what, like,
it's had a little bit of a bump in the last like week, so it's around 8,000. But I mean, still a massive, over 50%.
Because I mean, think about it. If you were one of
some people say it was a correction, but things don't correct 50. I mean, I guess crypto's.
I guess you could.
The only one that does, but at the same time, like, it was definitely a crash for most.
Yeah, and I mean, if you were one of those people that like, literally people were taking out like second mortgages on their house and stuff to like buy in because they're just like, it's gonna happen.
Right.
And now they're sitting at 50% of their investment possibly, or maybe less. Yeah. I mean, if you bought in at like 17, 16,
I think that's why a lot of
and me included, I was part of that hype wave a little bit, because around that time, there was a lot of exciting stuff happening, and I definitely bought some at that point.
I remember having a conversation with you and your brother, and it was like, listening to me talk about it, I'm sure if you were in the room, you would have been like, dang, I need to get into this stuff. Like, hopefully, at least I did a decent job.
No, totally. No, seriously. And my brother was already pretty like heavily into it, and I was just kind of getting started. But yeah, both of us were, Matthew definitely more, and he's still super knowledgeable about it and is still learning tons about it. But for me, it was like, I knew that I didn't want to put in more than I was comfortable losing. That's the biggest thing that was the biggest thing for me, was I was like, if I lose $1,000, it's not going to be the worst day of my life.
Right.
Like, but if this is $1,000 investment and I hold it and things go positively, then I'm going to be really psyched that I did that.
Right.
And I think that what kind of goes into play with what you're talking about earlier with obviously the hedge fund, like diversifying.
Right.
If you put $1,000 into one thing and it doesn't work out, like that's like playing roulette and like betting on the green or like betting on the, the number.
Yeah.
And it's like, if you can spread out your risk and diversify, it makes a lot more sense.
Yeah.
But anyways, I just kind of went on a tangent, but yeah, let's talk about the dip. So what happened there? Like, why do you think it?
So it's kind of funny. Yeah. I was doing a presentation, on blockchain and what my plans for the future were. I wasn't necessarily selling anything yet, but I was just trying to educate people on it at the time.
Cast a vision.
Right, yeah. And so I was sitting in front of like 15 people who would be, potential investors, and it was December 12th or something like that, mid-December, and it was the day that Bitcoin rose some absurd percent, but went from like 12.5 to like 17 in a matter of a day, literally 1 or 2 days. And while I was sitting in this meeting talking to these people for like 2 hours, it went up like $2,000 in that 2-hour span. And I remember driving home, and it was funny too how different the mentality of the average person was back then. Mm-hmm. Like even wise investors, it's like impossible to not like to be in the middle of a hype wave and not kind of fear, like have this FOMO.
Yeah. Oh yeah.
But my fear is now, because of a lot of these experiences, just changed the opposite. And this is when it started, because I started thinking, this is irrational. Even for me, I'm 100% into this. Quit my job to try and get into this. And this is not healthy. This is not safe. Because, when I started, so I quit in like August of 2017 with
your job.
A sort of very like, I didn't have an immediate plan. I knew what my end goal was. I knew that this technology was going to change the world, and I knew that I knew that before a lot of people did. So I wasn't really sure what to do. And like very quickly, I started on the process.
It's kind of like knowing like Noah in the Bible, like knowing the world's going to end, and you're like, I got to build a boat.
Well, I started freaking out. And I think when I realized like if I didn't come from a telecommunications background and didn't see, like, because I was sort of exposed to the more like nefarious side of Bitcoin. So I was doing some working with huge enterprises, like huge enterprises in the Atlanta area. And, it's called ransomware, but it's essentially holding a digital gun up to a company's digital assets, whether it's their customers' records or whatever number of thing is.
So security numbers, whatever it is.
Any sort of digital thing that's just valuable
logins and
proprietary.
Yeah.
And this is important because this will actually show the reason why this technology is so important. But any sort of thing that a company that was strictly digital based, but also proprietary and not to be shared, because those things have so much value, if a hacker gets access to them, there was no reason for a hacker to get people's actual financials, like a company's financials, and steal money from them. But what they would do is get access to this valuable information. Like for a hospital, for example, getting people's electronic medical health records, holding that at ransom to the hospital. And what these hackers would do would say, hey, I want X amount of Bitcoins in this wallet by this time, or this protocol to F over your hospital will initiate. So good luck. And it was crazy. Would
they normally release it? That's typically what happens, right? They normally like release it to the public. So then it's like, that's really bad. Or they would just delete it all too. Like I've heard of like, sometimes they would like.
Well, the whole thing is it was sold at auction. So like if people so usually the hackers were not the people that were going to do anything malicious. The people who got access would sell it to people who would do malicious stuff with it. So what they would do is sell it on the dark web. Hey, I have 100,000 medical records with social security numbers to boot. Go for it. It's an open treasure chest. And they'll sell that for money if you don't pay them the ransom, which is what happened to Target and to some other companies that actually lost. So this is when I started so I started realizing like how much of our world was digital.
It's
and
absurd.
How crazy important and like vulnerable all that stuff is. And it's literally ones and zeros in computers. It's just digital nothings, but it literally means everything. So then I started to investigate like of the world's biggest companies, how much of the actual value behind them is intangible. And it's nuts. Dude, if you liquidated, so the S&P 500 is like, for people who don't know, is pretty much like a standard, like, I don't even know how to explain it in just like normal terms, but it's 500, if I'm saying this right, it's like 500 different companies. It's a mutual fund, sort of.
Yeah, I think so. I don't know.
Wow, I'm going to make myself look like an idiot for not being able to explain the S&P 500. But okay, let's just take this. Let's scratch the S&P 500 because I should know how to explain this exactly, but it's kind of difficult. But let's just take the 5 most profitable, largest companies that everybody does know about. So Facebook, Microsoft, Twitter, Amazon, exactly. If Google. You liquidated every single thing that those companies had, so in other words, just sold everything.
Like physical goods.
Right. If you sold everything they had, 92% of those companies' value is completely intangible.
Wow.
Even Amazon. With all their inventory. That's the only reason why it's 8, because if it wasn't for them, it'd be 97%.
Wow.
Completely intangible, right?
Because Amazon has like some of the largest
literally almost
inventory.
100, except for their buildings and their people.
That's pretty crazy.
But but what's insane though is...
But that's how it is. Like, I've heard that saying, like, Airbnb is the largest, real estate company in the world, and they own buildings. Uber is the largest transportation service in the world, and they don't own any cars.
Right.
All this type of shit. And that's how the internet is changing our world. Like, everything is becoming digital and intangible.
It's making it so what the internet has done. The internet in and of itself is just a protocol. It's called TCP over IP. It's basically the yes or no. It's the train tracks, the train switches that make the internet go. So like, it's just a protocol.
What does TCP stand for? It's okay if you don't know. I was just curious because I've heard of like IP.
IP is like internet protocol.
Your IP address, like your internet protocol address that links your machine, your thing to the rest of the globe. Exactly. So TCP is like the tracks that are connecting everyone's IPs.
It's the transfer mechanism. So basically, like if your IP address is a train stop, like the TCP is like what it
is, like the railroad
transverses on, and the actual railroad is fiber optic cables.
Yeah. Yeah, you kind of explained this last time a little bit. It was pretty fascinating because you're saying like the company that you were working for was one of the companies that really like laid that foundation, literally laid the physical foundation of the internet.
Right. So so what I first was describing is like how much like valuable is in digital stuff, and I was like, dude, that's insane. And then by working for level 3 is when I started understanding the second part. So going back to the TCP over IP thing, that's what enables the internet to be what it is. It's democratized information. That's all it really is. It's just sharing information over, like, it literally is like a super, super, super advanced, like telephone, really.
Yeah.
And that was really just a super, super advanced, like, Morse code machine.
Pretty much.
Really, yeah.
Because it's all ones and zeros. Right. It's literally on, off. That's all it is.
I mean, so
which is gnarly to think about.
Which is insane, right? And that's like, you don't have to understand that kind of stuff to get this.
It's kind of like understanding the version of like $1 billion to a penny. It's like...
But the only way, so the way that the internet is built now is incredible. Like the ability to completely democratize and decentralize information is what enabled the internet to disintermediate all of these companies. So the reason why Amazon is getting so big is because Amazon's just better. It's cheaper and easier and quicker.
More convenient.
Period. So humanity will take the path of least resistance, period. So the only thing that the internet, because people always describe like, what is the internet? What is the internet? And then talk about social media as if social media is this extension of the internet. Social media is the internet. The internet is just us.
Social media is such a terrible word.
Yeah, it really is.
It's such a terrible descriptor of what it is because it's really just like it's just like the next
evolution. This is how we communicate. This is literally how we communicate. Yeah. How we share what's valuable. How we, like, the internet has sort of become our third place. And what I mean by third place is like you have your work, you have your house, and then it used to be like the coffee shop.
Presence,
or like you go back to like a 90s, Friends, they had that coffee shop or like the mall. Boy Meets World, they'd be like, let's go to the mall. Like, that used to be cool.
Yeah, you're
you
so
don't go
right.
to the mall anymore.
You're totally right.
So, and the reason why millennials, like people give millennials and especially the generation below us, like so much crap, like, oh, you're so into your phones and everything. It's just like, that's where
it's literally their world, and that's how they hang out with their friends.
Which is sad in its way, because it definitely has its negatives and stuff. But it's like, in the same way that the internet takes positive, it takes a lot of positive things away. It still opens up, because this is the safest and most incredible time to be a human being.
Of course,
it really is. Like, you can look at it on. But what's weird is, at the same time, political divisiveness is at an all-time high. Well, it's like, people's trust in our president and our governments is at an all-time low.
Yeah, that's
so
true.
It's like, why?
The divide, though, I think, is a lot of it is sensationalized, because you walk down the street.
Oh yeah,
and I'm not gonna be wearing I'm not gonna be immediately walk up to you, ask you your political affiliation to decide if I fucking hate your guts or not. You know, like I can get along with someone that I don't agree with politically in real life. But obviously, you know.
Well, I think what the internet is doing now, to your point, and what I was saying is it closes people off to like immediate personal connections, but also opens us up to realize that like this country has never been like, everyone is acting like we have all of a sudden have all these problems. But coming from middle class, like upper middle class white America, it's really easy to be like, what the hell is going on? Yeah, the country is not what it used to be.
Yeah,
it's changing.
And it's actually kind of beautiful, because like,
it is beautiful.
We're like exposing all these problems that
were always there.
Yeah, exactly.
They're always there.
They were always there, and we always just kind of shoved it under the rug.
Exactly.
And can pretend like they didn't exist, but they still do.
But because we have immediate information and access to stuff going on, it makes us feel like if there was an explosion in a factory in China and 100 people died, how long would it take before somebody in America would find out in 1965? If they might never found out at all, right?
Yeah, they probably wouldn't.
So it's not close to home. So people will talk about having a small mindset. It's very easy to have a small mindset when your world is very, tiny. Very small.
Yeah,
and so like we grew up in these very fractionalized communities that all have, but like I think what's happening in our country and in the world as a larger unit, but like every country in the developing world and in the developed world is going through what we're going through. France, Japan, South Africa, everybody has like a very, you know, like right-wing conservative thinks we should never change anything group, and then everything needs to change group.
Yep.
And whether that's Republican or Democrat or red and blue or whatever, and like in every country, it's like more opposed than it's ever been. Mm-hmm. And I think it's because like really what I was getting to is, and what is such a big deal about blockchain, and I hope I don't like be confusing about the way I've said it, but like, the internet is built on like a simple protocol. It allows us to send documents, emails, like anything of information. When I send it to you, I'm sending a copy of that and retaining the original, which is amazing. This is what allows our engine to work the way it does. But it still has like huge fundamental flaws, because there are a lot of things that are digital that shouldn't be sent that way. Like money, for example. If I send you $100 digitally, it's really important that you know I don't have it anymore, and then you can actually go spend it. Yeah. So it's like the double spend thing.
It's not just like a number in the machine. Because that's what's basically happening with like banks and stuff before. You know, you literally had to like move funds around, and then literally your bank account is just a number in a computer.
Sure. Is the amount in your bank account.
Oh, exactly.
Which is even scarier.
It's insanely scary. Like we're literally just like kind of all just teetering on this. You know what it is? We're all just collectively agreeing that this is our system, even though it's not founded on anything.
Yeah.
You know?
And that's a huge point, and I'll extrapolate on it. So like what's happening is that's the way that the internet works. Mm-hmm. It's fundamentally, it's sending copies and retaining originals. But then when it comes to what I was saying about level 3, you realize there's a lot of things that are in digital form that are not meant to be shared and nobody should see them. Company secrets, medical records, like my social security number, just all this stuff.
Yeah.
And it's incredibly exposed from an enterprise side. Like companies can't hold back what's private to them, both their stuff and the people that they trust to keep it with them.
Yeah.
But then on top of that,
it's kind of like the path of least resistance. Like you said, it's like, it's really easy for me to just, if you need my social security number, to text it to you. It's probably not the best way of doing things.
Yeah, definitely not.
It's pretty stupid.
Right.
Or to email it to you or whatever. But like you said, it's kind of like path of least resistance. What am I supposed to do? Like drive to your house and like hand it to you on like a piece of paper and then we burn it afterwards? You know, like,
right.
Like what are we supposed to do? It's like the path of least resistance. I'm just going to do the easiest thing in the short term.
Right.
Maybe I'll pay for it in the long term, but I kind of don't give a shit because I've exposed some kind of sensitive things before and nothing really happened, so I'm probably good.
Yeah, I mean, okay, so like, so the internet protocol that we have in place now, like I've said, it enables us to do an incredible amount of stuff, and has enabled a ton of companies to do an incredible amount of stuff with a very tiny amount of employees. So, for example, those same companies, those top fives, the Amazons, Facebooks, Apple, all those people employ 147,000 people.
It's pretty absurd.
Okay, so the U.S. job market grows by 175,000 people every month.
Wow.
Okay, so these companies that are worth trillions of dollars. So just for a Bitcoin perspective, Bitcoin's market cap is like not even 100 million, or right at 100 million, I think, right now. That's 1/10 of Amazon, one company.
That's
of the top
insane.
5. So, I mean, so for, that's just a word to people who have been waiting for some sort of price prediction or something like that. There's a long, long way to go, a ton of room.
For sure.
For this technology. But
market cap, for people that are listening, means like there is $100 million in Bitcoin. Like,
right.
It.
Like total amongst everybody who has it.
Like everyone who has Bitcoin,
the entire
that's how
market,
much.
that's how big it is.
Yeah. Which is kind of absurd.
Which is a lot of money,
but not really. Because like you were saying, some people's hedge funds.
Well, right, for an entire asset class. So like there's tons of different asset classes, whether it's real estate or equities like stocks and bonds.
Yeah.
Gold or precious metals is an asset class. Gold is worth $8 trillion.
Wow.
And nobody our age is buying gold. So that's another one of those things that I'll get into later. Nobody our age buys gold. Do you have gold? Do you own gold and hide it under your bed? No, I don't think so.
I actually got pretty caught up in a YouTube rabbit hole one day about gold, though. Gold and silver.
You can go into some crazy.
there's one dude named.
There are some weird people out there, man.
Well, there's this one guy named Mike Mahoney or Mike Maloney or something like that.
Oh yeah.
He's actually pretty good. Like I've watched a lot of his videos. Like he's pretty interesting. He's got a lot of good things to say. But I mean, at the end of the day, like you said, it's like gold is one of those things that, yes, historically it like holds its value even like in recessions and all this stuff. But it's like at the end of the day, like I don't give a fuck about having it. Like It's not even one of those things that I want to have.
It's like scared to like
a bar of gold.
Really,
like why?
Now when I started, that's when when I first started really getting obsessive over this technology is when I understood that was the third kicker for me was gold, really understanding what it is, how it works and everything. And that's when I started understanding the Federal Reserve and being like, oh my God. Like,
just like, whoa.
Because that's when you were like, that's when you realize like, and that's when I personally was really irrational and being like, oh my God, like what's happening? It's like with anything in your life, when you figure something out and you feel like nobody else knows about, but yet you understand how important it is. You're like, what is, nobody cares about this? How, and like, so you ride this teeter-totter of I'm right or I'm insane, one of the two. Mm-hmm. Like, and I'm like pretty sure I was in the middle in some way in there. But like, okay, so I've kind of hit on this like multiple times, but like the internet is democratized information and allows for an incredible amount of things. But as we can see, is what it's created though is this weird. It's turned the world into an exponential grower. The internet has literally taken the world and started going by exponential growth rather than linear growth. Okay, so like everything about our society and our acceptance of technology was still based on like every one of our social institutions is top down. So a university, a government, a school system, our military, everything is general down to principal down to
and like
this.
How else do
companies,
you run it?
Companies down, like top down, schools top down, same thing. The internet is the opposite.
It's completely bottom up.
It's completely bottom up, right? So
it's very true.
It's us.
But each individual like website could be kind of like top down. Like
right,
you go on Facebook,
you can build little walled gardens but like because it's the same. Who owns the internet?
Nobody.
Right.
We all
people are like, well, what?
Which is pretty gnarly to think about.
Right
like,
now, but
when someone asks that, like a little kid, like who invented the internet? Who created who owns the internet? It's like,
But what I think what we don't realize yet is the fact that, and this is all getting into how I finally understood this is a big deal. So it was the first thing was realizing how much of our worth in our society right now is already digital. The second was really researching, and I won't get into all of it because I think it's something that everybody should do, understanding how our money works. For real, like our actual monetary system from the start, from the core. How is our money printed? Who actually owns and allocates its distribution? Like, why does it have any value? I literally still thought that the money that we use now is like backed by some sort of tangible asset, like gold. It hasn't been in years.
Nope.
It's literally backed.
Thank you, Mr. Nixon.
It's backed on nothing but 4 words: in God we trust. Nothing else. It's literally based on our trust in the U.S. government. And then on the macro scale, it's the world's trust in the U.S. government. Because the United States dollar is the reserve currency for the entire world. So even China and Russia doing oil deals with each other is in dollars per barrel, which is nuts. Which is literally why people in this country don't realize that's why we are what we are, period. It's not the biggest military. It's not anything. It's literally control of what the world values and having the most of it and having way more than anyone else. And so that's what's bought us a ridiculous military and all this stuff. I won't get into all that, but it's like realizing that, and then also understanding how much of that is just digital nothing.
Yeah. Just
and
literally
how scary
numbers
that
on
is.
the screen.
And then on the third thing was understanding digital like what real estate and the internet looks like. And you started talking about it, where it's like we are the internet, right? But the internet has data. So you hear the term data center all the time. Data centers all over the world, because actually for the internet to actually run, for internet protocol to exist, there have to be pathways and gateways. So for a piece of information to go from California to Georgia, it literally goes on like a route fiber highway system that has like intersections, like, so it might take the CenturyLink highway to Denver and then the AT&T highway to what's it's called, then to New Jersey, wherever you are. It's literally taking different routes, and every stop it gets to, it has your IP address. This is where this is going. Yeah, it's literally like a piece of mail. Stamp. Now that happens at literally, it happens at light speed because that's all it is. It's just
fiber optic cable, right, which is insane to think about.
So that's the reason why, like, me searching for like, why does my poop smell bad, like in Atlanta versus in like Brisbane, Australia, it would get to me if the central server was in California. It would get to me in 0.4 seconds, and it would get to you in 0.8 seconds if you're in Australia. It's literally the difference of time and how far that light had to travel. Yeah. Which is like heady in and of itself, but it's also really cool that that's how our world works. But you can't.
We need to get faster than the speed of light, bro.
Right. You can't, but it's like all of our world is built on this insane infrastructure, but then I can't send you $100 without somebody else saying that's $100. Exactly. There has to be, so our whole world, there's two things. So people get really scared about like automation and like the internet's going to take our jobs. No. Like automation will take your job if your job doesn't require you to have any creativity or to establish some sort of trust somewhere. So the reason why, like white collar jobs or whatever, like take accounting, for example. Accounting is still insanely based off of trust, just blind trust that the accounting firm that you hired like will do the right thing.
That's very true.
It's literally all it is. And so,
but also social proof. Like, you know, if they have a bunch of clients that are happy, then you go to that accountant and you all of a sudden have a bad experience. You're gonna be like, what the fuck? Like, why did I get a bad experience and these people didn't?
You're 100% right. But I'm talking more about like the things that we do in order to establish trust in our world, whether it's dealing with, like, think about it. That you have to have some sort of, think about all the things that are valuable to us outside of money itself. my social security number, my vote for president, like the VIN number of my car. Like, I mean, there's so many things that are valuable to us. And then on top of that, there's a lot of things that we don't
IDs.
really realize until right now is starting to happen with Facebook.
Yeah.
People are, for the first time, people are getting upset. What's astounding to me is that people get upset about that.
Yeah.
We live in a private, because people are like, man, is privacy dead? And I'm like, well, privacy has been dead for about 10 years. Mm-hmm. They know where you are, when you're there, who you, like, it's insane the amount of people are like that know stuff about you. It's frightening because, okay, I talked to some people from Uber that manage like data analytics.
Yeah.
It was kind of a joke, but they were explaining to me that like they could tell, like they can sort of tell when people are like cheating on their spouses based off of the time, location, and then like frequency of certain like car trips at night and it was like, and that's crazy.
Like, it makes total sense. I actually was listening to, I watched a video from The Verge the other day where they were talking about, is Facebook listening to you? Like, because people are all worried about, like, is my microphone being accessed at all times because I'm getting some creepy ads?
Sure.
And they're like, literally, they don't even need the microphone to serve you ads that you might be talking about, because your profile, you think you're like this unique individual, this unique person.
Yeah.
You are so similar to hundreds and thousands of other people on the planet that just by your metadata of like, oh, he likes this, he likes this, he talks like this, he interacts with this, he goes to this store, he looks at these websites, he's probably exactly like this dude, and this dude just searched for M&Ms. So we're going to serve you an ad for M&Ms. Holy shit, I just talked about M&Ms yesterday. Yeah, because like you're really similar to like all these other people that are also probably searching for like similar things.
Yeah, but at the same time, like, for example, if a marketing company, in real world terms, so this is the first time where every single thing that we do, everything has a trail, a breadcrumb. So back, and in the past,
for better or for worse,
right? In the past, like phone calls, things you said in public, like all this other kind of stuff, like there was no record of them. Everything you do and say will be there forever, and people don't actually take that seriously and what that means, the implications of it. But also from a marketing standpoint, how easy that is to look at those trails and predict by some degree of certainty that this is what your behavior actually is, what things you like. But imagine an ad agency coming to your house, knocking on your door, you're not home, and then they are like, well, might as well just let ourselves in. They come in, start looking at all your stuff, they open your closet, and they're like, oh, he has a bunch of microphones and headphones and stuff, and then they go and look around and whatever, and they start to make the assumption that you're into like podcasts and stuff, and then the next day they show up at your house with a microphone and a brand new headset or whatever, and they knock, and then you're there, you answer, and you're like, hey, what's up? And you're like, hey, so we came in yesterday, looked around, figured you'd really like this, so we came back to see what you think. You'd be like, the F off my porch, what? You know what I mean? Exactly. But at the same time, we do that online and then act surprised when something bad happens and it's like the fact that people would blame Facebook. Like, why would you trust Facebook? Well, they shouldn't be able to. They have a profit incentive. What do you mean? It's your fault. It's a responsibility thing that people have to, and it's honestly it's just like our problem as a society. Everything is somebody else's fault. And like, you point at somebody, you're pointing three fingers back at yourself. Mm-hmm. Like, I don't remember who told me that, but I was like, dang, like that's a good point.
Mm-hmm. It's a good point.
It's a good point. Yeah. Like,
that's why I always point with all five fingers pointed at somebody. I do the
you do the full Hitler hand.
Yeah, exactly. Yeah. Like you point with all of your fingers, you're fired.
You're fired. I don't know, because I could go on like a huge tangent about that kind of stuff.
No, I feel you. No, but like it is interesting because it's something that's happening right now. Like they just got done with the Senate hearings with Mark Zuckerberg and all this stuff, and you can talk about the funny memes and how Mark Zuckerberg's a lizard person and all the kind of funny stuff that's been going around. But at the end of the day, like these senators, like some of them literally were so stupid they did not even understand how Facebook made money. They were like, so Facebook is free, how do you make money? And he's like, oh man, like how do I even explain this to this dude? Like
that's insane, dude.
And like you have to really
It's like HQ. Do you play HQ?
No.
The game. Do you know what it is?
I know what it is, though. Yeah.
Okay. Everybody is so baffled, like, how they give away money. And I'm like, what?
Dude,
What's
I know
the
someone
first
that,
thing?
I know
What is
someone
the
that
first
won.
thing? What's the first thing you give them when you sign up for that app? HQ.
Information. I don't know.
But what? Your phone number. And people are like, people act like surprised. We go, I don't know how these people got my number. I don't know, because the people who own HQ sold it
to somebody else.
They said, hey, we have 2 million people's phone number who play this game that are at this age.
Yeah. And they connected their Facebook.
Right. And they connected their exactly. That's what I'm trying.
Dude,
and that's how the game is making money.
Too,
you know how much money that
convenient.
game is making?
Stupid.
To be giving away that kind of money?
Yeah.
Absurd amounts.
Well, the thing about HQ though, like I know someone that won.
Yeah. It's real money.
They won like 83 cents.
Oh, that's depressing.
Because now there's so many people playing.
Yeah.
That if you win, you're not winning that much money.
Yeah, unless it's like a one winner takes all. But then when they go to shootout questions, they're literally impossible. Like you just have to straight up guess, and you just have to get lucky.
Well, I've always said like if you just got a room full of people and just kind of like narrowed it down and like, all right, you go for that one. I don't think it's that one. You know, I don't know.
Yeah. I mean, yeah, you can still. It takes an army to be good at it.
And then it's like, okay, we'll split the pot. And then it's like, we're splitting 83 cents.
Right.
You know,
But okay, well, it comes to serve a point though. Is all I'm trying to say is that your data and your
has a value.
like your personal ID, your digital identity has value to it.
Totally.
The way that you spend money and all this other kind of stuff like could potentially have value to it in a digital means very, very soon. So what the internet does by enabling all this information and copies of information or whatever, it democratizes everything, but it's created this asymmetric wealth gain model because the people who take advantage of it have such an unbelievable... So it's like, there's the saying that says like a rising ocean raises all ships or whatever, rising tide raises all boats, but this one doesn't. So the rising tide, the ease of access, gives us a bunch of things for free, but actually exploits us for so much more money than what we actually get back in value. It's not even
Well, it's hard
close.
to put a value on like what the convenience that we get though.
Well, but here's the thing though. It's I'd say yes. It's hard to quantify what it means per person, but it's not hard to quantify what Twitter is worth. It's worth $400 billion, sorry. That's just people's opinions. Because every time you type a tweet, you're working for Twitter. In a way, you're
I don't tweet, so.
Well, I know. I mean, I don't either. But at the same time, like, and that's not to say don't go tweet. I'm not trying to be, like, some revolutionary macro
live
crazy
off the grid.
Person. Right? No. So what blockchain does? So the technology that underpins Bitcoin is called the blockchain, and Bitcoin is built off of blockchain is just one of 4 things that make Bitcoin what Bitcoin is. But the blockchain goes into a lot of other digital-based assets, and creates this entire new set of asset classes by making information actually valuable. And so to explain it, like I was saying, when I send you something, it's a copy. But when I want to send you money or I want to send you, the lease to our house or my medical records or something, I could do that, but it wouldn't be very wise for me to do that. You can't send copies, and it's the same reason why too. Like if I went to go to get my driver's license and I showed up with a copy of my birth certificate, maybe that's not a good example because I think you can get by with a copy.
Or if you had a copy of your ID and you're trying to get on a plane.
I want to go get my name changed and I show up with a copy of no chance. You have to have the original. There has to be the original. And that's why it's crazy that you have to have, even a passport is a physical thing. You can actually lose it, which is kind of sucks.
It totally sucks.
What blockchain does is it allows for pieces of data by using cryptography and using blockchain and tying that together. And that's the significance of Bitcoin. It was this incredible monumental feat in computer technology because for years and years and years and years and years, from the late 80s, before the internet even became a thing, they were trying to figure out a way to use digits as a means of payment because it's way easier. It just makes more sense.
Yeah.
But there was no way to solve the double spin problem or to keep it from being copied and reused. There was no way to create a digital lockbox that could be sent that you don't
retain a copy
of. Right. So what blockchain does is it actually allows that for the very first time. So without the use of a third party that has to establish trust, trust is established through the actual protocol itself, through the mechanism itself. So in other words, like to paint an actual example, it's based on public and private keys. Mm-hmm. So let's bring back Blockbuster as an example. Like they used to have those little pickup bins, right? Mm-hmm. And I could go up to it and drop a video into it
to return it,
but I couldn't get it back. Once it's gone, it's gone.
You couldn't reach in and grab someone else's.
Couldn't reach in and grab anybody else's. Key. Right. So that's the public key. The actual container is the public key, right? So it has an address. I know where it is, and I can send something to that address. I can't get back, but the person who owns the key to the back of that bin, the private key, can now open it and has access to everything inside of it. So like that's the way that Bitcoin works, is by you're basically sending digital means to people's mailboxes, and only they can open the contents in the inside. But once you send something from yours to theirs, it's gone. But what that means is it's not
it's
just...
It's kind of scary in a world where you're used to being able to like get stuff back and undo it.
But that means money, intellectual property, anything of value can now be digitized and sent through fiber optic cables using the internet rather than sent through the monetary system. So it's so insanely crazy how easy and how it's like we have super highways when it comes to the monetary system and how the monetary system interacts with the internet. It's like we have the network, the infrastructure is there, but we're using horses and buggies. Mm-hmm. Like it's crazy. It's pretty gnarly. So like for me to send, and this is why I get so passionate about it, is because the asymmetric growth of the internet is because like it gave access to the information, but it only gave a very select few people the ability to actually like capitalize on it. Mm-hmm. And so what blockchain is going to actually be able to do is give people the ability to own real estate in the internet in a digital means. So this is all those things coming together, and I don't know if I did a good job of explaining it, but it was understanding how valuable that digital information was, understanding how much our monetary system was already digital, but then thirdly, understanding the value of owning infrastructure in these protocols or whatever. Because it's like going back to the 90s. If you could just buy a stake of TCP, if you could just buy a stake in just the internet, and I'm not talking about any specific company that uses this, if you could just buy a stake of that, it would have been a guarantee home run hit. But you could go back to the 90s and invest in Amazon, you'd be a bazillionaire, or you could go back to the 90s and invest in pets.com, and without the knowledge of knowing what was coming, you could have been a winner, huge winner, or a huge loser. But what blockchain is...
In the .com bubble, just to clarify, that was basically like everyone was just popping up websites, and everyone it seemed like, oh my gosh, pets.com is going to be the one-stop shop for pets or whatever.
Right.
And it was just really easy. Like nowadays, you're like, yeah, that's going to fail. Like, everyone I have a website. You know what I mean? Like, so.
Well, dude, think about the things that at the time, so many people said, like, this is going to change everything, and it just didn't. Like Google Glass, remember that? It was like the Google thing. Yeah. Nobody got, like, come on.
Well,
and that's why people use the same argument.
It was too creepy and it was too limited. It was never like, it was kind of doomed from the beginning, but you're totally right. Like, but I would say the evolution of Google Glass, wearable tech, you've got Apple Watches everywhere. Like, and it hasn't been so that widely adapted to the point where you and I are wearing them, because we're not. Yeah. Because they didn't do a good job of teaching us why it was necessary. But guess what? Both of us have our smartphones literally attached to us right now. Like, mine's in my pocket, yours is on your lap.
And it's so valuable. This is like, if I went to your room right now, like I could figure out a pretty good amount about you probably. Mm-hmm. But if I had your phone.
And you had the password.
And I had the password, I know everything about you. Totally. I can know everything about you.
And that's what's so creepy about like when you start to try to use someone else's phone, immediately like you can't navigate it right. You can't use it right. You're like, like you pick it up, you can't get into it. Yeah. Like even when like I broke my phone, I got a new one. Even just setting up that new phone, just realizing like, oh yeah, I got to set this up. Oh yeah, I got to type in that. Oh yeah. Like so much of it is literally tailored for me.
I would rather lose my wallet than lose my phone.
Wow. That's a good point. That's a good point. It's a very good point.
And it's not just because my phone is expensive, even though it is. Like I would, no matter the content.
It's less of an inconvenience.
Yeah. That's crazy. And there's probably less valuable information.
The only thing I really would, Matt,
there's a lot more valuable information in my phone and in my text and who I talk to.
That's very true.
And there's probably $40 in my wallet.
The only thing that's annoying though is like, you can just order new credit cards, but like if all your cards are there, if all your cards are in there though, like how do you pay for stuff in the next few days if you don't have any cash?
Sure. But now, you could use your phone I could Venmo people for, that's what I do in the past. Like if I've lost, I just Venmo people until I get my cards back.
That's actually true. I hadn't really thought, because I've thought about that before. I'm like,
but even Venmo,
I don't have like Apple Pay or anything set up. So like, I've thought about that. I'm like, if I forget my wallet somewhere, it's kind of a sucky situation, especially if I like need food or need gas. I'm like kind of screwed.
Right. Well, that's a good transition though, because people would say like, well, we already have digital ways of sending money because you have Venmo. Well, no, because Venmo, most people
take a cut.
Well, right, but it's not even that they take everything of value. Not only do they take a cut, but they take everything that's valuable. So it's the same thing as a bank. You give your bank all of your actual value for real, and in return for the trust that they keep it and won't lose it, you
get convenience.
Have the private key. Literally. So it's a good analogy. The bank has a private key to all of your money. They can lend it, and they do. And when you want to go exchange it, it's actually theirs. So they're technically responsible for returning it to you. But the difference, with Venmo, if I send you $100 in Venmo money, who still has it?
Venmo.
Right. It doesn't matter who changes hands on the end. That's why they don't charge a fee.
It's like still a user, all that.
Now, but if I wanted to take my Venmo, right, and put it into my bank account.
I think you mentioned this last time.
It takes 3 days.
Yeah.
Because it's not really there. So, or they have to go meander all of their accounts and go and find it to you. So all the while that you have money in Venmo has a $700 million trading platform per day. And that they can get, and they go and trade it and make their money, make 6-7% off of everyone else's money to make absurd amounts of money for themselves.
So are you telling us to take all of our Venmo balance
they're
out?
Not doing anything wrong. They're not doing anything wrong.
No, they're not. It's just another bank.
Right. Having Venmo is way better than doing stuff, writing a check to your friend.
Sure. Oh yeah.
Because a bunch of my buddies from Statesboro still do that with each other. Like, I don't trust that Venmo. I'm like, dude, what? It's 2018. Stop writing checks to each other.
That's funny.
But still though, the actual tangible value, the difference, if it was Bitcoin.
Honestly, I hate checks because there's no paper trail.
Right. Well, the difference of Bitcoin is because no central entity is controlling the actual thing at one given time, it's owned by everybody. So all it really is, so Bitcoin is 21 million. There's 21 million of them. And together, that is all the Bitcoins there will ever be. And that's based off of a math. And that the ins and outs of how that work are way over everyone's head, including mine, pretty much. So, but what's important about that is it's a finite supply. So this is where the gold thing comes in. So it's a finite supply, and the reason why it has value is because I say it does. And strictly not because of anything else. So it's determined by the market, but at the same time, a Bitcoin, because people will be like, a Bitcoin's worth $5,000. A Bitcoin's worth $7,000. Well, it could be worth 75 million rupees, right? So a Bitcoin actually's value stays the exact same. Same thing with gold. Like a piece of gold is a piece of gold at any time of the year, whether it's 1920 or 2020.
Exactly.
It's a piece of gold. But what people are willing to, like the value that they're willing to ascribe to that changes based on its like current market value. How much people want it. Because when nobody wants gold, it's because their money is somewhere else. It's in equities or something else. That's the reason why gold always goes up in market crashes. Because money doesn't actually go anywhere. People are like, oh, the market crashed and money disappeared. Sorry, no, it just went from your wallet to somebody else's.
Yeah.
Like, literally just all it is. So once value is created, it can never be destroyed. It's like matter, sort of.
Yeah.
It just depends on where you house it. And that's so important is where, and this is all the stuff I'm realizing now dealing with these, like speaking to super high net worth kind of people. I used to never understand art, like super weird art. I get it now.
It's a store of value.
A lot of it has nothing to do with anything but the fact that my $5 million can sit in that painting, and I can sell that painting for $7 million in 5 years, but I could put $5 million in the bank. The government would take 40% of that, and I would lose money every year because of inflation. So when I have massive amounts of money, I store it. Because wealth is not just stored in dollars or cash.
Of course not.
It's stored in so many things. Like
that's why, like, a lot of wealthy people, like, you're like, why do you need $100,000 watch? It's a store of value. Like, you literally...
If you could turn around and sell that watch now, like, there's some things that the value doesn't hold very well. But, like, classic cars, why in the world would you ever buy this isn't it right. Who in the world would buy a $5 million Ferrari? The guy that knows I can sit on this Ferrari for 10 years and sell it for more. So that's what honestly really, really wealthy people understand is just like I was saying, exponentials, exponents. Every single thing, once your value is created, it's either going to be losing you money or making you money. You have to put it in the right place so that it's always
going up.
Net. And that's why, like, with the wealthy people I talk to, I'm trying to get them to get maybe 1 or 2% of their net worth at the most. Some people can do a lot less that have a ton to go into this space, saying, hey, look, I get that it's very early, but this is a huge, huge deal. It's very early stages. It's going to be super volatile. It's going to be super unpredictable, which is why if you're going to take the risk of getting into this, which you should have a team of professional people who are managing it for you, who do this for a living, like people who have already done this for a living and different perspectives, but also give you the ability to have exposure to it, but you're not gambling, like I was saying earlier. If you buy Bitcoin, because a lot of people too would be like, I bought Litecoin, Bitcoin, and Ethereum. That's way better than buying one of them. It's still kind of like this, and that's going back to the original thing you said about hype. It was based off of complete irrational behavior, which is really good for the name to get out there, for people to, it's really good for Bitcoin to happen, and then for a lot of bad things in our world to happen after that, like Facebook, and like there's going to be some more things I think in the near future that have to do with governments and the way people handle stuff, and people are going to start being like, there's got to be a better way of doing these things, and there is. It's just when people actually start to realize that. Like,
have you ever heard? Do you listen to Joe Rogan?
Yeah.
Yeah, so Joe Rogan, he actually attributes this whole snowball of like the past year starting with Caitlyn Jenner. Because he said that Caitlyn Jenner, like, it was kind of like the straw that broke the camel's back for a bunch of like quote unquote conservatives. Like, so then they're like, we need the libtards are taking over. We need change, and that's why they got so irrational and crazy over Trump. And then
Trump won. That's why Trump won.
Yep, literally. And so literally, like, Joe Rogan like attributes it all back to like Caitlyn Jenner, and he's like, it actually kind of all attributes back to O.J. Simpson because of like it's just
whole
funny.
Campaign. Think about this: Make America Great Again. It's because people realize, like, wait a second, we have the reasons for everyone to be really happy, but
no one is.
Why
or
is
like a lot of people aren't?
Well, right. Why is there so much political unrest and societal unrest? It all has to do with money. Period. It always does. It always will. And it's not necessarily money, just money. It's like the ability to, like, having control over money and having more of it than somebody else gives you more power over that other person.
Of course.
And that happens on the large scale and the...
Yeah, and like
that's the reason why the U.S. is involved in the fact that we were like, no, you can't have nukes, and they're like, wait, but you have all of them. They're like, yeah, but you can't though. It's like, wait, what?
Yeah, it's like we trust ourselves not to use them, but
right,
but we can't trust you.
But the only reason we have the authority to say that is because we're Big Brother. You know what I mean? Like.
And it is kind of creepy how, like, literally, all these companies, all these big things that we're talking about were created in the prosperous, petri dish that was America at that time. It's like,
it still is though.
It still is. But like at the time of, like, when all these big, Microsoft, Google, Facebook, Amazon, all these names that we're like talking about that are coming up. I mean, and even some of those names, Facebook, Amazon, they're all fairly new.
Right.
Like they haven't been around that crazy long.
Well, okay, check this out. So.
But
this is another picture I'm
saying is like they run our world and it's all like American.
Right. Well, I try to explain this to a lot of the investors that I meet with is people vastly overestimate what will happen from a technology perspective, especially the internet. People vastly overestimate what will happen in 2 years and vastly underestimate what will happen in 10. So like people are like, oh man, this is going to happen. And it's like, on the macro, is blockchain and the ability to use digital means as a way of sending things of value going to change the world? Without absolutely. A doubt, 100%, absolutely. Because it will allow for more people to get disintermediated. Think about all of the third parties who, some of these institutions we don't even think are third parties because they disintermediated other industries that were even more filled with bureaucracy, like the taxi. Okay, Uber is a perfect example. Uber is one of those things about our digital world that we feel make us more seamless and all this other stuff because you don't use cash, right? So you get in and out of Uber with your phone, and it's great. It's better than taxis. I'm also not hitting on Uber, and you can drive an Uber. It's great. But most people don't understand, though, that Uber makes $0 from the rides. There's zero profit in their actual business operations, none. So when I get in and out of an Uber, the money goes from my bank account to it goes from my bank account through the SWIFT system, through the automated clearinghouse, then to their bank account. Oh, no. Goes through Visa, whoever the credit card processor was, then goes to their credit account, then goes back through those systems to get to the driver's bank account, all of which, all those steps,
take a cut.
There's 6 of them. They each take 2% cuts, and the driver doesn't get his money until like 3.5 days later.
It's pretty gnarly.
Why though? That doesn't make sense.
Like because you should be able to like pay that driver directly.
The protocols that our monetary system is built off of, not the internet. The protocols are literally, the SWIFT system was made in the 70s. ATMs were way before the internet. So the digital means that they use to communicate are literally ancient, archaic. Yeah. Like it's insane. They're old. They're not even like in digital terms. To explain hardware to like clients when I worked for Level 3, like stuff was legacy if it was 3 years old.
Wow.
Legacy, and like, dude, this is in an internet world that makes sense though. Like
totally,
3 years is a long time.
For sure. Just think about a phone 3 years ago.
Yeah. Well, okay, now, right, but like think about 2 years ago. 2 years ago doesn't feel that different. Like
no, but like 10 years ago.
So
feels
this is what
insane.
I was saying. It works in retrospect too. So it's an easy way to figure out what's happening in the future. Dude, things are probably not going to be that different 2 years from now.
That was 8th grade.
Right. Okay. So in 8th grade, there was no Uber, there was no Spotify, there was no Nest,
Airbnb,
there was no Airbnb, there was no iPhone, there was no
maybe
App Store.
The first one. Because the thing is 10 years. I think they just had their 10-year anniversary.
Yeah, you're right.
So I think the first one.
Still, but there was no App Store. There was no App Store for the first year.
There was no App Store.
Think about how many, like,
you couldn't even set a wallpaper on your iPhone.
Download our app.
There wasn't even a video camera on the iPhone.
Right. Okay, so all of a sudden, right?
You couldn't even copy and paste.
Right.
Dude.
Right, but like, so all the people, so think about that though. All the people in 2002 that were saying mobile technology is going to take over the world, everyone was like, eh. 20 years from them, those people are going to be, oh man, stupid wealthy. I mean, the ones who really went after it or whatever.
And that's the thing too, is like, you're like you said, you're going to have to deal with volatility in the beginning. Like if you get in like too early and you put all your marbles in there and then you hit a dip, like you're fucked. But like, but like you have to hit that sweet spot of knowing when that curve is actually going to start going up, because
when in doubt,
if you're in caveman times and you know about Amazon, how good is it for you?
Right. So
it doesn't help you.
One of the things that the three of us talk about with Will and Gene. So Will is like our quantitative guy. He's an absolute machine when it comes to building. He's like predictive analytics and artificial intelligence backed, and the dude makes, so all of our trading algorithms are built so that we take like my expertise on blockchain and understanding it, and they all do. We all sort of overlap. And then Gene is, twice our age essentially, and has like he worked at derivatives desk at Credit Suisse. So he has a lot of like expertise in just straight up traditional fundamental analysis and like trading and all that kind of stuff. And then we take both of those things along with Will's inputs and we codify them all. So it's all, because like, and that's one of the things you have to be able to do to be successful in this, like really successful, is because, I mean, buying Bitcoin and buying all that kind of stuff is still a good idea. I would never tell anybody that it's not, because everyone's like, oh, it's down 50%. Like, dude, it's up 400% still on the year. Okay.
That's actually very like, crazy true.
Right.
Because last January was what? Like 1,000?
Yeah.
Which is insane.
Right. Dude, it's $8,000. Tell me one asset class that you could 8x your money and be upset about it. Like, what?
Like, people are pissed that they got in like 4 months ago and it dropped. It's like 4 months.
Right. And a lot of those people are millennials and even younger. And it's like, these are people who have no understanding of what investing is. Investing and gambling are not the same thing. Investing and betting, not the same thing. Investing is like planting. Investing is planting. You plant a seed, you bury it for a little while. It's going to feel like you're buried for a little while.
You're literally burying it.
Nurture it. Like, you know what I mean? Investing in something, and especially yourself. Oh, yeah. It's like burying yourself.
Oh, for sure. No, and that's the thing. Like, when you're starting like a new company and you're realizing all the expenses.
It sucks. Right. It's like, wait. I'm either suffocating or I'm going to push through this.
Yeah, and you have to decide whether you're going to keep watering that thing. Like for me, for example, like I was reminiscing on this a lot because a year ago last week, I recorded the first podcast with one of my friends. Not for my podcast, it was for his podcast.
Sure.
And he had a bunch of equipment, he had all this stuff, and his podcast was kind of like secretive because he didn't want like his parents to know about it, and like he talked about some stuff that like I don't know, he wanted to keep it kind of secret. So that's fine, cool, great. But I was on his podcast, and just based on life and the time commitment and him moving and all these things, he ended up never releasing that podcast, and he ended up quitting. But the crazy thing is that was what inspired me to actually do mine. And so like I kind of started and I didn't realize that was going to be the case for him. I didn't know at the time when I started mine that he was going to stop his. But I realized like, okay, I can see like what he did. I'm going to like bury some of these expenses. The expenses of like buying all the Adobe programs so that I could edit and all this stuff. Buying a new laptop that I knew that I could like edit stuff on and be comfortable with. Buying the microphones, buying the recording stuff, buying a Squarespace subscription so I had a website to host it on. All these things that like you don't think about because I'm like, it's like, just start recording podcasts. Like it's pretty easy, but you gotta, once you press that buy button, you're like, am I really gonna do this like long term? And it is crazy because like when you make an investment, when you bury those expenses, you have to like trust that I'm not going to have access to these. These might go away completely. This might be a total failure. This might be a bad decision. Yeah. But if I do pay off, if it does pay off, if I leave the money in, if I bury these expenses, if I water it, like who knows what the fuck it is. Like
and that's the why.
Unlimited.
And that's the why is like, okay, so one of the and I kind of got to the end of it and. As many tangents as I probably already went on, but like it's the one thing it's
kind of the theme of the podcast,
right? Yeah, but the one thing I want people to understand is the underlying technology that underpins this stuff is going to revolutionize the way that we do everything. It's not about Bitcoin, it's not about Ethereum, it's not about any of them in particular. Bitcoin will be wildly successful. I really believe that it will, even though it's the most rudimentary, basic part of this thing. It's like email was to the internet. It was the very first application.
And we still
use it for some weird reason, even though it literally makes no sense. It looks ridiculous. It functions ridiculous.
I really hate emails.
But yet it's somehow still one of our primary means of communication because it was first.
Just kind of like the combustion engine for a car. It's like,
sure,
we're still going to have gas engine no matter how much.
It's a perfect example. There's way better things that we have access to. But the infrastructure built around it is like it's the same thing. The infrastructure built around the US dollar is insane. So all the people who are saying like Bitcoin's going to take over the dollar. I mean, come on, dude. Like, should it? Yeah, it makes a lot more sense. But will that happen? I mean, maybe in 25 years, I don't know, 20 years, 15 years. I'm not going to make any sort of predictions, but all I'm saying is this technology is going to fundamentally change the world. The recent price dip, if that's what people are concerned about, I would probably tell them, do more research, because if you actually want to invest in something, investing is not betting or gambling. If you want to bet and gamble on Bitcoin, be my guest, please, because it will help me in the end.
Exactly.
There's more money, there's more people betting. Well, actually, you know what? I take that back. I actually immediately take that back, because even though my ability to make money in this in the early stages is built on the volatility, that doesn't mean... So the reason why I'm excited about what's happened recently, and I'm going to use Bitcoin just as the barometer because it just is, but and because it's still 40-something% of the entire market cap as a whole for the entire industry. But like, Bitcoin coming back was a direct result of smart money taking advantage of dumb money. And dumb money, I don't mean actual dumb people. I just mean
uninformed and like uneducated,
exactly.
like irrational decisions.
Ignorant. So not stupid people, ignorant of what they were doing, what they were getting into, what their expectations were, all that kind of stuff. That's what drove the thing insane. And if you actually go and look, like really, really crunch numbers and look at like the macro scale of the people who were putting in massive chunks at like, and which is wild too, is a lot of that money is not in the US. There's like very, very
it's
little.
Mostly Korean, right?
Well, it's
like
a lot of Korean. Well,
Korean.
and that's like a lot of that money is coming from China, and you know, Japan is also massive in this. But like, it's so early that it's one of those two-sided things for me where I realized I kind of even got caught up in the hype train.
Yeah.
So this is sort of the transition that I wanted to get towards, and we started talking about it because, you know, I realized this. I realized that the technology was going to change the world. I realized that myself, along with the other two guys who I was constantly in communication with, had this unique three-part but also overlapping set of skills that gave us the ability to be rational. So it was taking a fundamental analysis, a technical analysis, a behavioral analysis, overlapping all those concentric circles, and the middle thing is a rational analysis. And that's actually like a legit, it's called John Bollinger's framework. So John Bollinger is like there's all kinds of fundamental and technical trading techniques named after him, like Bollinger Bands and things like that. But that was that was what he talked about from an investment standpoint. You have to have all those three things, and those three things have to overlap correctly in order to make a rational decision. So that's how we invest in this stuff, is I take my technology, telecommunications, future-minded sort of mindset and layer it on Gene's actual understanding. Because there's so many times where Will and I, because Will's 24 as well, and we'll be like, oh man, we can do this, and this. And then Gene's just like, no, you can't. I'm sorry. That's not the way our system works.
Yeah.
You have to do this.
Exactly.
You have to have this. You can't do this. You know, when you're addressing an investor at a group, you have to do this. This is just standard operating procedure kind of thing. But what all of us can do, we have certain skills that overlap, but like I couldn't do either of their jobs and neither of them could do mine, really. And because I'm more also like client facing, doing the sales stuff, and they're both so much smarter than me. It's ridiculous, like actually ridiculous. So I can kind of like pretend to be smart sometimes. But like
really, you said, it's kind of like the future casting stuff and the selling of it. Like you can explain it in like technical terms all you want,
right?
But until you understand the reason why all of this makes sense and why
this is happening now, like because it's not new necessarily. Like the Bitcoin white paper came out before Twitter. Like it's actually been around for a long time. For sure. But it's just getting to a point where now people realize that people are like it's bigger than blockchain, or it's bigger than Bitcoin. The fundamental thing that makes Bitcoin one of the fundamental things can be used because there's private blockchains. Like Ripple is one of the biggest cryptocurrencies, one of the biggest digital assets that there is. It's not a cryptocurrency because it's a private based blockchain where in a digital, so Bitcoin uses, in part of blockchain too, is a distributed ledger, which means it's literally like a magic book where every time anybody ever does anything on the blockchain, it's recorded, timestamped, and put in that thing forever. It's immutable. So it's a way of tracking assets that nobody could ever tamper and nobody could ever change. So it's not even like security is built into the framework of what it is. So it's not a castle with a moat built around it like cybersecurity is now. So that's the reason why cybersecurity is a bazillions of dollar industry, is because like nobody even knows what the F they're doing. They're just trying to do their best to protect the castle.
Yeah.
But this is building the castle out of bulletproof bricks. You don't need the moat. It's intrinsic to what it is. And the same thing is true of the cryptography side of it and all that kind of stuff. But like, what's so important about this kind of stuff is, and I sort of lost my train of thought a little bit, but like we see this having massive fundamental changes in the way that a lot of things happen. It won't happen the way that we think it will, or the way that anyone thinks it will. It's a moving target.
For sure.
And that's the reason why what we're trying to offer people is so much more essential, because what we're trying to tell them is we're not venture. We're not a venture fund. We don't invest in companies. We invest in coins and tokens, not companies. We invest in the underlying assets that these companies are trying to support. So it's investing in the TCIP, not in Amazon. So it's not investing in Coinbase or investing in Bitfury or BitPay or any of these companies that I hope, with both fingers crossed, that these will be wildly successful. Because for them to be successful means that more people will come to the space, more money will come to the space. But betting on those has underlying risk to it that I'm not willing to take. So for me as a business, I'm not going to do that. So some of those companies will prove themselves later, and we'll get into it later. But as of now, we're investing in the underlying stuff. So
like foundation, basically.
Right.
You're investing in the foundation rather than like the shiny object of this is going to change the world, blah, blah,
this
blah.
is going to be, and so for everybody, because I'm sure there's going to be like a guideline that says like, you know, I don't know how you're going to describe it, but basically people who care about this space, and I've had so many, the reason why I knew this would be applicable to people now was because of the questions that I'm constantly getting is, well, what's happening? What about this? What do you think about this? And all this other kind of stuff. For everybody who wants a prediction about Bitcoin or Ethereum or any of those, I don't know. And I can't give it to you. But from an overall market cap standpoint, we're still at like 250 billion, 300 billion. It's gone all the way up to 8, close to there. But the amount of money that will come into this space, both from this industry capturing value from other places, which is an inevitable thing, like we talked about. Companies will use blockchains, banks will use blockchains, all of those blockchains, some of them you can own stakes in, and you should, like Ripple. That's what I was going to get into. Ripple is a privately owned blockchain-based digital asset that's for banks. Difference is you can own it. It would be like owning a stake in the SWIFT system or the Federal Reserve. How mind-blowing would that be if you could own a stake in the Federal Reserve and not be worth bazillions of dollars? Yeah. So that's what this is. And so this is going to be worth trillions. Trillions and trillions of dollars for a lot of reasons. One, because of millennials. So millennials are the largest generation. And this is not just obviously numbers-wise. There's more people now than there was before. But percentage of a whole, this is the largest generation ever. And that's huge because baby boomers were like Gen X, which is like the people between millennials and baby our boomers. Parents. Yeah. Like they're so small comparatively, which is weird. Like it's almost like it skipped. Well, it did. It skipped generations. It was like the silent generations kids, the ones before our parents. Like it's kind of weird. So it's like our grandparents came from like the post-depression boom, and then our parents came from like the 60s, 70s, home from World War II boom. So it was literally like home from World War I, or not World War I, but like post-depression. Yeah. You know, and then they had a ton of kids. I don't want to get into all this kind of stuff, but whatever. Millennial generation is massive.
Yeah, no, it makes sense. And it actually, like, because that Generation X you're saying is the one that's in between, right?
Sure. Yeah. It's very small.
It's like, those are like your 30, 40-year-olds right now, right?
Like, they're like between 35 and 55.
Yeah, and like, to be honest, like, when you actually think about that group of people, like,
35 and 50, but
it actually does like seem smaller to me. Like I feel like I don't know.
No, it like is like by the millions and millions. It's
I feel way like smaller. I like know less people in that age group. Like
I mean, I think that's probably a function of just the
who I'm around and stuff.
But no. It literally
it's
is
kind of true.
And the reason why that's important though is because where are millennial like every single generation, and there's a YouTube video about it. And it's the guy. His name's Tommy Lee. He is one of the chief analysts at Fundstrat, and he lays out this whole thing.
Tommy Lee also like a
I think his name is Tommy Lee.
Guy?
Tommy Lee Jones.
I don't know.
Tommy Lee. I don't know. Whatever.
I don't know.
But like
Tommy Pickles.
He like Tommy Pickles. So he lays out all these reasons for why crypto will be worth a ton of money in the future, and it's because every single generation creates their own asset class. They create their own thing that like equities were for our parents, where like, dude, in the past, like nobody invested in international markets, like, but between like way in the past, but then like our grandparents' age, but then between like 1980 to 1999 or something, the Japanese stock market grew 400%.
Wow.
Like that's insane.
It makes sense though, because like a lot of those big companies popped up at that point. Like Sony, like all these big companies.
Right, right, and
a lot of technology companies.
Toyota, Honda, like the world's,
Yeah.
So like,
it is kind of gnarly too, because Japan's like fairly small compared to like China.
Right.
China.
So millennials coming along, like where and the difference is too is like 90 something percent of millennials, and this was like I don't remember who did this research, but it was like something 90 something percent of people like just outright don't trust the banks.
Yeah.
Like, because we lived through our parents going through 2008, and we lived through we just lived through a lot of I don't trust that, because we've been also
fake news,
like, fake everything, and it's really easy because the difference between our generation and our parents is we'll Google it and look it up. So like we're really, really against like just believing something because I say so kind of thing.
Yeah.
And every young group of people doesn't want to listen to their parents, but the difference is that we had access to the truth like right away. And whether it was the truth also was, but still though, anything you want to know, you can know.
For better, for worse.
Right. And so when somebody's like, no payments until 2020, I'm like, that's because you're gonna get 3 times the amount. I'm like an idiot. Like,
yeah,
come on.
Yeah.
But like, you know what I mean? So,
I think
it's like all these things combined, but I think one of the ones that like, or like the point that I want to try and make to people is, when you really, because there's probably a lot of some people who listen to this that really, really know this stuff, or at least do a lot of research on it and stuff. Try to understand, like, when you look into stuff, try to understand like how this will disintermediate, like because it's an inevitable thing that parts of this blockchain technology will but you have to be rational about it. So like you're rational about the way you distribute it, you're rational about the way that you diversify it, and you're also rational about the amount that you give. So like you were saying, it's the amount I was willing to lose, but that's a rational decision to make, And a lot of people were incredibly irrational about this. The future is coming. I can't say when or whatever. I do believe there are some positive things in the making, but a lot of the late stage part of that mountain that was the trip to 90,000 or 19,000, the tip of that mountain is a lot of late stage down money that those people got burned.
Yeah, it was a lot.
But who soaked up all that value, knew where it all went? To the institutional players who were playing the smart side of the triangle,
of
the pyramid, or of the of the graph.
Yeah.
And because that's really what it is, if you really think about it. When the stock market, if you can track it, it's literally like somebody is selling something in the assumption that it's not really worth something to them right now. The other person is buying it because it is worth something to them, and it's literally like it goes up the train. So it's literally like dumb people. Really, really smart people, really, really smart people getting into the danger zone, reckless, straight up guessing, making bets, and then on the other side, it's the exact same thing in the opposite direction.
Imagine being the guy that bought at 19,000.
Like literally bought a $19,000.
Like you literally bought a 19,000. Well, you didn't buy a $19,000 Bitcoin. You bought some Bitcoin when it cost 19,000. Meaning you didn't spend 19,000. But still,
even to those people, like, let's just say you did buy $19,000 worth of Bitcoin and you had $8,000, like you still have 50. I mean, not that that's a good thing when it comes to investing, because it's not, but like you still have 50% of it. Like you didn't lose it, but to all those people who are sitting on it still, like take the amount that you're sitting on and play the field. If you have a lot of Bitcoin, that's probably good. But if you go back to 2017, every single other asset in the top 10 outperformed Bitcoin in terms of its percentage growth because of Bitcoin.
Yeah.
But every single thing else did. Ethereum, if you would have taken $10,000 in 2013, or sorry, in 2014, put it in Ethereum or Bitcoin, your Ethereum would be worth, I mean, ridiculous amounts more.
Yeah.
Ridiculous amounts, right? So,
and people think like, oh, well, Ethereum is worth way less per coin than Bitcoin, so it's
there's 90 million. It's the same thing. It's a finite supply, but there's 90 million Ethereum
versus 21
so the
million.
Market cap for Ethereum and market cap for Bitcoin could be the exact same, and the price per coin would still be 3x.
Do you think it's better to have more just for simplicity's sake?
What do you
know
mean?
what I mean? Like just in like dealing with day-to-day transactions, like, you know, because that's another thing. Like you said, we got to be rational about how people are going to use it. Are we going to go to the store and see prices and like 0.0012 Bitcoin will buy you this cheeseburger?
Yeah.
Like I don't think we're ever going to really see that. And like
I think I think Bitcoin will be used as the transport layer where you can pay it in Bitcoin, but it will show its cost in dollars.
Exactly.
So Bitcoin is just the medium by which it's sent.
Yeah.
And so that's what's an inevitable, because dude, big companies have been using Bitcoin for that reason for a long time. Years.
Because it's more simple.
Exchanging it immediately though. Mm-hmm. So when I have to pay, because think about, dude, it costs companies absurd amounts of money to pay their own employees that are not in the country.
Oh, for sure.
Just because like remittances are a monstrous industry, and that means like taking money from one country and moving it to another.
It's pretty absurd.
And what's also like so evil is that like so many of the like a Western Union or a company like that, their whole business model is built on the fact that they had to move physical money from country to country, like on a ship. Like if you came to America and worked and you had to send money home to your, patronage in freaking Haiti, you had to put it in a box and ship it in a boat, and they had to come and get it. Like,
that's pretty crazy.
But think about it though. If you go to send money to people in Haiti, it takes like 10 days and costs like almost, no, it's more than 10%. So seriously, some of the poorest people in the world who get access to this, not just this country, but it's Indians working in Saudi Arabia or in the UAE or whatever. It's people working, or Chinese workers working in Japan. So those people to send money to their own family it costs them
like 10% of it, yeah. And it's
Could
ridiculous.
you imagine? That would be like to go to the ATM to pull out $100 and it costs you 10.
Yeah, you get 90.
That'd be insane.
No, I've been to like some concerts and stuff where it's like that, and
you lose your mind, right? You lose your mind. But imagine if that was every single time. But you're paying for the convenience and the service of that happening. Right, but you're
But in the 21st century, it doesn't make sense.
Exactly. So it's like sending money, and then they make the excuse it's a cross-border payment. There's no such thing as a cross-border email. You know what I mean?
Yeah.
There's no thing. So all of this will revolutionize, and there's trillions and trillions and trillions of dollars that I believe will come to this stuff over the next, I think it will be 2024, 25, 26 before it's seamless like cloud is now.
Yeah.
People will bark about cloud about blockchain and by 2020, it'll be everywhere, but then it'll be so in the background of everything that we do that it's not something we even think about.
Yeah, exactly. Like you were saying when you were talking about the SWIFT system, like a lot of people probably don't even know what you're talking about when you're talking about like when you swipe your credit card, no one is thinking about the steps that it took to actually
and the money that it costs. Oh, I didn't get done explaining the Uber example, but like all those parties that take 2% from the Uber example, that and the 8% per ride that it costs them to insure the entire process costs them the 20% of the ride that they get. So they give the driver 80% of the ride, but then actually retain everything of value that you give to them for free. Your location, your number, the time you drove, who you drove with, where you drove, all of this information that they now own and have the rights to is what they build their algorithms off of that put their drivers in the right places and all that other kind of stuff. That's what gives Uber a $65 billion valuation, pays the CTO $20 million a year, and so on. So they're not making money on the rides, they're making money on the data, the digital asset, the value that we give them. It's the same thing with Facebook. It's the same thing. Twitter doesn't even have a business model. They don't make any money at all other than just the value that their company, so they don't even have a process at all.
No.
But is Twitter valuable? Ask Donald Trump, for sure.
Yeah.
It's definitely valuable if you want to exploit certain things.
Yeah, for sure.
Or just say something funny or say something you should definitely regret.
Yeah, well, the cool thing about Twitter is it's kind of like this, it's almost like kind of a...
I die on people. Like, people's Twitters are like, it's funny how the internet can be fun. Like, people can be funny once. Everybody can be funny once. It's really difficult to be funny consistently. Like, that's
true.
why being a comedian is impossible for most people.
Yeah.
But like, anybody can be funny once, but the internet collects it all and just like,
yeah.
There are some people who say some outrageous stuff and it's hilarious.
Well, the funny thing about Twitter too is like everyone thinks that like no one's paying attention until you do something that like Jimmy Kimmel reads mean tweets. Like, who's writing those? It's just some random dude, but all you have to do is search Barack Obama and you'll find some crazy mean tweets.
Oh, yeah.
You know what I mean? And like, so people, it's almost like they're not paying attention until they are, or until you fuck up, or until you do something amazing.
Right.
You know?
Yeah, exactly. Well, yeah, I mean, because a lot of people too don't think about like the stuff that they do online until it matters.
Yeah.
Like, who's the guy that like liked some like he liked some like porn star's tweet or something?
It was someone that worked for
no. It was the president.
Ted Cruz.
Yeah, it was Ted Cruz.
It was Ted
That's
Cruz.
Right. Yeah.
Ted
and it was
Cruz's
just like
Twitter retweeted or liked. I think it was liked a porn star's like video on Twitter.
Oh my God.
And the whole internet went crazy.
Yeah, exactly. And it's just like you don't really think about your trail, and it's like you should. A, you should. Mm-hmm. B, there's a lot of technologies like people should really, and I think everybody once people get on, like a lot of Bitcoiners and blockchain people are like really extreme about it. Like I am one of those people. I think I've come back to earth from where I was when I first quit my job, and I was like, oh my God, like I was basically like an evangelist about it. And now I've kind of come back to earth being like, wait, I'm still really, really early. It's not going to happen overnight. Like,
But you still are like.
But the business model hasn't changed,
exactly.
And the implications of what is going to happen or haven't changed either. And when I thought this would happen haven't changed. But it's just for anybody who listens to this, that's like, man, what should I do? Go and look into. Now there are plenty of small scale projects that will be successful that are still small right now. Because you go on any like video or forum or Reddit or anything, and there's always that one person that's like, you guys should try 123 ABC coin. It's amazing. And it's like, go check out their project and their blah, blah, blah. And it's like, dude, this is what's a cancer to this environment right now, because there's some of these companies that don't have anything but 3 developers and a beta and an idea, an amazing idea, I'll grant you, and nothing more, and they're worth $100 million. Mm-hmm. And that's what's just like so dangerous. Yeah. Maybe 1 in 100 of those will pull the cat out of the hat and be successful and really pull it off or whatever. Most of them won't. For sure. And a lot of people are going to lose a ton of money on this is the next. The next time I see somebody say this is the next Bitcoin, I immediately write you off. Because nothing is the next Bitcoin. Bitcoin has already done something and has captured an insane amount of value. The next person who can come,
everyone always wants to be that.
So
like,
many
this
coins.
is going to be the Tesla killer. It's like, dude, Tesla's not going anywhere.
Right. And that's why so many people lose, because they're thinking horizontally. Mm-hmm. We talked about this in our last podcast. It was the people from the Microsoft thing. When they did their product releases for like 2017, every single one of their executives said something about
comparing it to Apple.
Exactly. And Apple's conference about their new technologies didn't say one thing. Yeah. One person's playing a vertical game and the other person's playing a horizontal game. And that's why people get mad about Apple having their own chargers and kind of cornering their customers. And they do in a way, but at the same time, they also do things their way, period. And that's why, because people can say what they want about Apple, but I have an iPhone, and I have a Mac. Yep. I mean, it's like, geez, because I'm one of those people too that's like, man, F Apple, but I still have $1,000 worth of their stuff.
Oh, easily more, because you have a MacBook and a phone. I mean, I mean, and the thing about it for me is like, sometimes it seems a little user hostile, but they're always forward thinking. Like, people got mad when they changed the chargers, like from the fat one to the skinny one. Now we look at it, we're like, that was dumb when we use those fat ones.
Yeah.
Like it literally
that was
doesn't.
miserable where it's like, do you have a charger? And it's like, yeah, I have a 4 though. It's like, oh.
Well, now it's like you have headphones. Oh, you don't have an aux
remember
port.
That was only like 3 years ago.
What, the port thing?
Yeah,
it's
the
like
change.
literally even like the cord
changing cords, yeah.
Which is insane because I literally like found an old iPad the other day and I didn't have a cord to charge it. Like I didn't have the fat one.
Remember how like so many companies like sued them because they built like radio like
docks and
stuff built it and then
now they're all obsolete. Yeah. Well, and that's even funny about like cars of that time too. A lot of cars had those 16-pin connectors.
Yeah.
And now it's just silly that they like hardwired that into the car. It's like that's kind of dumb. But
that's the thing is cars don't really change.
Well, the thing that is really silly right now though about Apple that I do have to point out, we're kind of going down a little rabbit hole, but
right.
In their new Mac computers, they made the whole giant jump to using USB Type-C ports only. So the only ports on the new laptop are literally those tiny little ports. You have it. You have the new MacBook, and so it literally has one port, right?
It has 2, but still.
It has 2. Oh yeah,
but you have to buy a dongle, and the dongles were like $70.
Exactly.
It's a pain in the ass.
This is literally what Apple is doing. They are taking away your ports and selling them back to you in the form of dongles. That's literally what they're doing. Like they're literally like taking your ports from you and then selling you back the ports. It's hilarious. But
damn, you're just painting a picture in my mind that's gonna make me so angry now every time I look at my computer.
Right? But no, but a lot of times the dongles that are the best aren't even the ones made by Apple. But anyways.
Yeah, that's true. Mine's not made by them. So.
Exactly. So anyways, but it's forward thinking. They're trying to get everyone to move to this new standard. But the silly thing is the USB-C port is really small. And all the new Google phones, all the new Samsung phones are all using USB-C to charge. So why is the iPhone still using lightning cables? Like iPhone should switch to being USB Type-C. If they switch their computers to 100% USB Type-C and they're saying this is the standard of the technology of the future, then why are they not putting that new standard of technology of the future into the phones and making that the charger?
Purely profit.
Oh,
purely.
100%.
Yeah.
1,000,000,000%. Yeah. Like even the Beats speaker, like the Beats speaker, now that Apple bought them, to plug the speaker in to charge it, it's a lightning cable. It's like the iPhone cable, which is hilarious because like so many people are like, I can't get this to charge because they're like assuming that it's a micro USB port because the only thing that uses lightning is
they're probably breaking it in the process.
Literally, they're breaking it because nothing else uses lightning except for iPhones and iPads, But anyways, that was a whole rant. But that's my gripe. I think that everything. I agree. I'm forward thinking. It's like just like with Bitcoin. It's like there's going to be a pain period where things are going to be somewhat inconvenient. Yeah. Things are going to be weird. It's going to be the Wild West.
It is 1994 in terms of where we're at.
And we're talking about
the infrastructure is not there yet.
Yeah.
The broad understanding of what it actually even is and does is not there yet.
It's kind of
all
like
the people talking about Cardano and Icon and all this stuff, and I'm sure you don't even know what I'm talking about. These second and third generation. Cardano. It's like these second and third generation blockchains that people. It's literally like people saying, like Cardano is going to be the next big thing because it has segregated witness and Lightning Network and blah 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 blah, blah all this other stuff that Bitcoin doesn't have yet and yada yada yada. It's like people aren't even using Bitcoin yet. So why, like, you're creating a solution
to a problem that doesn't exist.
That's not there yet.
Yeah.
These are problems that will happen in scale, but not now. Should you be worth $200 million? Absolutely not.
No.
Absolutely not. And that's what happened in the tech boom, but it got to $8 trillion before it all started to dissolve, which is an insane amount of money.
The dot-com crash you're talking about?
The dot-com crash, $8 trillion. And that was 2000, and that was just the United States. No other countries played in our equities market.
Wow.
And blockchain and Bitcoin is at 300 billion. So we're not even to $1 trillion yet. We could go way past 8
before some sort of crash.
Before it could, right, exactly, before it could get obsolete. And it won't.
And $1 trillion back then is worth more than $1 trillion is worth now. So really, if you added inflation,
it's crazy.
It could go up to an absurd amount.
There's way more people. This is what a lot of people don't understand too. There's more people creating more value, saving more money, doing more things. So like, can gold stay where it is and Bitcoin be successful? Yes. That doesn't mean there's so much more value that's going to be sucked up that people are saying, oh, this is going to kill, right? Like what you're saying, this is going to kill this, and this is going to be this, and this is going to. It doesn't necessarily. Silly, things can move differently and both up.
Like, is this the new iPhone killer?
Right.
Like, people always. That's like always the clickbait title. The new Porsche Mission E is going to be the new Tesla killer. No, bro. Like, they're going to work in tandem because electric cars are going to be the standard of the future.
Well, and because not everybody is going to, like, there's always, the competition is good. So
exactly.
for like, people are going to be like, Ethereum kills Bitcoin. Okay, well, let's paint a picture. They do two different things. Ethereum, I describe it like this. Ethereum and Bitcoin is like a lion and a shark. Like versus, they're both masters and kings of their environments. But if you put them up against each other on which one's better, the difference of is there water in the tank or not makes one of them win and one of them lose.
Yeah.
So it's all about the environment. You know what I mean? Like a lion would kick the crap out of a shark in the middle of the Sahara when the shark's flopping on its side.
It's like all about
throw a lion into the ocean and it's done for.
Exactly. Exactly.
So Ethereum is a platform that uses smart contracts and does all this other kind of stuff, but it enables a completely different thing. So I mean, Ethereum is more like a digital oil in that it's a utility, it's a currency. So oil is the currency that supports the logistics, the aviation, the automotive. It supports all these other industries as this underlying fuel, literally.
And we don't think about it on a daily basis.
But Ethereum will be the same thing. It will be this underlying fuel to all of these decentralized applications that utilize its platform. So Ethereum is more like an internet 3.0 and Bitcoin is like a gold 2.0. So it's like there's two different things though. Yeah. One is strictly sending just digits as value and extrapolating them as money on both ends, currency, and the other one is a and the list goes on and on and on. But what I would tell people though is to get involved in the space. Right now is a good time. I mean, it's on sale. That's the way you got to look at it. It's not down. It's not dead. Don't ever buy something at an all-time high.
Enjoy the dip.
If you're buying something at an all-time high, you really better be questioning yourself. You gotta be.
Like the dude buying Bitcoin at 19.
You gotta be. So what I would tell people is to get exposed to this stuff. Do your research on Bitcoin.
What are your favorite resources to read about and stuff like that? Because people are like, okay, do my research. Where am I going to go? Like Wall Street Journal.
Dude, that's the thing though. Like, if you really want to know something, you can know it. And I'm not saying that as a blanket response, but I'm saying like, because I get those questions a lot where people are like, I just don't know where to look, and I'm like, well, are you even looking though? Because it's like, if you really want to know something, like let's say, how does blockchain work? There's a ton of videos on YouTube that do explainer graphics. Each one of them is different, has its own little take to it, and each one of them makes a very good point. I mean, some of them are awful, but you can figure that out. You can
see, like, if they have 1 million downvotes and like 2,000 views, they probably
exactly.
But
how long have they been around? Like, if you want to get current information, don't watch a 7-year-old video.
I've started getting into like camera stuff. Of course, there's 1 million YouTube channels about camera stuff. But when I looked up okay, what's the difference between ISO, aperture? Yeah, exactly. You watch Peter McKinnon, and I don't even watch Peter McKinnon because he's the most technical. I watch Peter McKinnon because I'm entertained as hell when I watch his videos. It's like, I thought about that earlier today. I was watching one of his videos, and I'm like,
this is the reason why he's good.
I'm like,
there's a ton of people who do what he does. Yeah. He does it better than them.
Yeah, he does it better than them because it's like a teacher. It's like, right? You have two teachers. One of them might be smarter than the other teacher, but whichever teacher is better at keeping your mind focused on the task and keeping you psyched about the subject is going to be the better teacher.
Yeah.
Because they're literally better at transferring the knowledge into you, whether that's through means of entertainment, whether it's through the means of just visually stimulating you so much. Because Peter McKinnon, for people that don't know, he makes a mixture of videos on YouTube. Like part of his videos are like vlog style where he's like showing his life. And then part of them are very technical, like showing you how to edit stuff.
Yeah.
Like, and it's very weird how they're all on the same channel and they all live in the same place, but like I'm addicted to all of them. Like,
yeah.
Like I'm super stoked to like learn everything.
Sure.
Because
he's great. He's great because I've seen stuff from him too, and my sister's really into the same thing. She's done it and mentioned him a bunch.
Yeah. He's
but like, I guess
he blew up like in a year. Like that's the crazy thing. Like he just started on YouTube, and that's what happens. Like the cream of the crop. Like when you are good, stuff will rise. The thing that happened with Peter McKinnon,
you can create actual real value for people.
Literally. Like, yeah, and that's the thing with Peter McKinnon. Like he started on YouTube a year ago, but he tells a story of what he was doing before that. He was working for he was a magician before that. So he like learned how to talk to the camera and knows how to like do the crowd stuff, and he can, he really knows how to engage people.
Right.
Then he was doing product photography for like so long, so he became an expert in what he did.
Sure.
And then he got into video, and now it's like all that stuff paid off. And now he's this sensation. He's doing amazing, and that's the same thing with anything.
But
it's
a lot of people, including myself, like, and we've been going for a couple hours, so I don't want this to turn into.
Hey, it's 1:50. We got 1:51 on the clock.
Okay, so let's try and cut. We'll cut it at 2. But
we'll cut it at 2. We've stayed just for the record. I feel like we've stayed more on topic though with like future technologies and all this stuff. Yeah. We've gone down some rabbit holes, but that's of course going to be necessary. But last time we were like.
Completely all over the place.
But it was good. It was super fun.
It was still good. But I think what I would like people to like take from this is don't get discouraged. This is a big deal. Mm-hmm. But if you are discouraged, really investigate yourself for why you are, because if you bought into all this kind of stuff specifically for hype, specifically because it's going to go to $1 million, and there was no fundamental reason, utility, or application for it that you saw in the future, it was a guess. And for some people it was a great guess, some people it was an okay guess, and some people who came on really late it was a bad guess. You know what I mean? But it's gonna come back, and it'll come back, will it be how it's distributed, and it's in the way it's distributed, which coins will be, we could be sitting here in 3 or 4 years and none of the stuff I've mentioned is relevant except for the fact that this industry is 10 times bigger than what it is. The individual players, because it's the same thing. I was mentioning this about the internet. It was an $8 trillion bubble, then crashed and went all the way down. So it went from $100 a share almost in like 2000 to like $6. So it crashed like 90 something %. While others completely crashed, but
to zero.
You know what happened though? The companies that made it through the tech bubble crash were the ones who were at the top going in. eBay, Amazon, all of those ones that are, some of them are still around now.
For sure.
That were the biggest then and were literally like a, speck compared to where they are now. So one thing that I try and tell people and that we talk about as a group for Dynamics for the fund, when in doubt, zoom out. Because if you really zoom in on what's happening this last 3 months, it's like, oh my God, zoom out. Zoom out. Because if you see the grander picture, it's still wildly positive. Because you could do that on Amazon in 1999 and 2000, and it would literally lost 90% of its value. And you scroll out, and Amazon was worth $100, crashed to $6, and has come from $6 to now being worth well over $1,000 as a share, per share.
Yeah, it's gnarly.
Because all of the when they got to $100, people were like, "Man, this is going to change everything. This is going to change internet retail." And then they're like, "Wait, but they only sell books. Oh wait, maybe this guy's crazy. Oh wait, and down the hole we go." Because all the confidence, all the fear and uncertainty,
the perceived value went out the window.
Right, the intangible value went out the window. But the root of it all, the fact that they were gonna, he reinvested all that money that they made. Amazon still doesn't make any money. No, return any money.
It's consistently pouring back into itself.
Reinvest.
If they paused that for one day, though, they'd be making bank.
Right, but the thing is,
they should
another
for
thing what people don't realize is that they're an
shareholders.
aggregator. Amazon's an aggregator. There's hundreds and hundreds of thousands of people who make a lot of money on Amazon. Amazon takes 15% of the cut. of the sale.
Yeah.
So they're facilitating commerce. They're not the only benefactor of now. The reason why they've been able to now get to where they are is because now they own Whole Foods. Now they own all this other kind of stuff. And it's the same thing with Google. All Google did was just aggregate traffic, but now Google's in everything, in its own physical products, and it's in the fabric of everything, literally. Facebook is the same way. They're just aggregating social interactions, extrapolating value from it. So it's like what companies had to actually be able to physically do, all of these internet companies could do intangibly and aggregate certain stuff and kind of disintermediate all the people who kept, who took a bigger percentage of the pie than they needed. So all that's really happening is the world's just trimming and trimming and trimming and trimming and trimming until the point where it just gets to a point where everything that we do is peer-to-peer, person to person. The way we spend money, the way we share information, the way we vote for president, the way we do everything will be based technological in digital stuff. And the fact that people trust digital means is not like right now, if we went to a doctor and he said, you have this, we looked at your knee and we think it's this. And then you gave it to a computer that said, hey, we just ran 1,700 of these cases and came up with these, treatments for it or whatever. The doctor says this, but after running 100,000 cases, we say this. Like, I'm probably going to trust the data more than I trust this one guy's opinion.
Literally,
and that's different than any time in human history before.
Yeah.
Because our parents' age would be like,
we had to go to the experts before.
Exactly.
Because they were the aggregators of the data.
They were the trust.
Yeah.
They were the ones who established the trust. And so now the people establishing trust is all of us together in a thing.
And that's why people are like freaking out about like, well, I don't want my health records, blah, blah, blah. Like, I don't give a fuck. If my health records are out there, like, who cares what I have?
Right.
I want my data to be able to be used for the greater good of humanity. Like, I want, like, if I have some weird disease or whatever, track me super hard, dude.
Sure.
Because I want my...
But you should be the one, the difference is in the future, you should be the one that has the authority to say, this amount of my data can be used by this person. So you should be able to say, hey, Cambridge Analytica wants to use your data to sell it to, you could either say yes or no.
Yeah.
That's what doesn't exist right now.
No.
And in the future, when you do own more of your identity,
the main thing I think is being able to use that data separately from being it tied to my social security number, from my name, from my address, from my car, from my...
Like your health identity in digital form shouldn't be your entire identity.
No.
Because like a company, an advertising company, all they need to know, they don't need to know that you went to Brewster's last night.
No.
Now, if you're selling ice cream...
Hey, I wish I went to Brewster's last
night.
Right,
me too, dude. I went to Publix because I got an ice cream fix last night and I just got ate way too much ice cream. But the difference would be, all they need to know is, are you between the ages of 17 and 20? Do you do this? Do you follow these kind of people? And you could give that information without giving... Hey, there's 100,000 people in this area that fit that criteria, but you don't know any of their names. So instead of Google being able to be the only one who makes profit off of that, you could sell that little tiny bit of information for a couple cents. So physically, literally own your identity and sell it for little tiny bits. That's what I'm trying to talk about the digital, owning digital real estate is literally like taking a data center that's owned by one company that makes, like, dude, the amount of revenue that's made off of, like, CenturyLink, the company who I used to work for, or did Level 3, is worth way more than Ford, like by the billions, and nobody knows who they are.
Ford Motor Company.
Right, Ford, like Ford.
Yeah.
And it's almost worth, it's insane. And these are huge companies that own all this infrastructure, that own the backbone. AT&T, like, man, they get such a ridiculous, like, unlimited phone plans could be like $4. Should be.
They should be.
I'm serious. Like, if the wholesale providers, if they took it and did a 4X, even if they did a 4X like profit model, because all it is somebody else's fiber to AT&T's broadband
literally
towers, and they charge you $100.
It doesn't even charge. It doesn't cost
nuts.
them anything.
Like,
it doesn't cost them anything.
It costs them bazillions of dollars to build it, but that's the barrier to entry, and that's the whole thing. Is in the old world, there's these massive barriers to entry, but now through this, it's not just crowdfunding, but it's like crowd movements towards certain things. So it's like it's what blockchain is almost like taking Kickstarter and turning it into like it's all, you know what I mean?
Yeah,
it's crowdfunded, crowd moved, everything. So like Bitcoin technically is the greatest crowdfunded project ever.
That's actually true. Totally true.
That's all it is.
Because like once it boils down to the end of the day, we've been talking about this whole time, it's perceived value. Like,
right.
Anything that we attribute value to, like we could for some reason attribute value to feces because
real estate. Think about how much real estate is perceived value.
Yeah.
This house,
that's
in
true.
freaking Los Angeles, 10 times the amount.
Yeah, totally.
Perceived value. Because if you took the actual value of wood and bricks and stones and stuff out of this house, it's the same everywhere in the world. That's why like modular construction is such a big deal. I can make a house in Chile and build it modularly and then flip it and turn around and sell it somewhere. So I can create it inside. That's the whole thing with modular stuff. That I mean, whatever.
Pretty interesting.
But you know what I mean, though. It's like, so I could obviously I could talk about all this stuff all day long, but it's a big deal.
Yeah,
so the internet is becoming a ownable commodity. It's commoditizing itself, and blockchain is going to be the thing, the catalyst that allows that to happen. But if you don't move on it now, you'll miss most of the gains from it. So it's not, it's not about, I promise you, and I'm sorry if somebody is listening to this and hope that I was going to give them a get rich scheme. There is no way, not in blockchain, not in Bitcoin, not in anything, unless you're just lucky. And some people were.
Yeah.
Dude, if I bought Bitcoin 4 years
This is
ago,
the only way you can get rich quick.
Sure.
Is luck.
Pure luck. Right. And luck is like, if the lottery was an actual like equitable way. Yeah, exactly. You know what I mean? If it was really a good investment, like, is it a good investment? No. It's like a guess. It's a gamble. The payoff is such a ridiculous thing that spending $5 doesn't mean anything, really.
So
but you're wasting money at the end of the day,
like
right?
Yeah,
right.
Exactly. It's kind of like.
But there are crazy people who play the lottery and like spend $30,000 worth of lottery tickets because at the end of the year they'll win at least.
Yeah.
$60,000.
No, I actually know a family that.
That's ludicrous.
Yeah, I know a family that.
If you were doing that, just make your own lottery, like make it up, and then you win every time. That's what the state does.
That's
and
true.
Nobody accuses them of it.
Well, it goes to fund the Hope Scholarship.
Make up, exactly, dude. Just be the person that makes up the lottery.
Yeah.
Because, dude, think of some of the lotteries, like actual lotteries, are owned by private companies.
Oh yeah, totally.
They win every time.
It's true, man.
And they get like 20% of it.
It's nuts. That is nuts.
But yeah, so anyway, this is taking all of our top-down social institutions, flipping them upside down. It's going to be a long, gradual process. I don't know exactly how it's going to work out.
And anyone that claims that they do know. If I was going to
bet on the ones that will be successful now or later, I bet you they're the ones that are the most successful right now, because that's what happened in the past. You go back and look. When in doubt, scroll out. If you're getting upset about something or whatever, scroll out. What's your actual why? Why did you invest in Bitcoin? Because you thought it was going to pay your mortgage in 20 years, or because you thought it was going to outperform the S&P or outperform some other way of storing your value? But if you're looking at this stuff to get your value, if you're listening to this and you're a full-time Bitcoin day trader, God bless you, because you have to be a machine to do it. And I couldn't possibly do it by myself. And I've learned that like the hard way in a lot of ways. I'm not a trader. I'm not a expert investment analyst on my own, but combining like my abilities with theirs and stuff, what we offer to people, I think, is the best way of getting exposure to this. But the same reason why I'm right now, I'm focusing on insanely wealthy people to build it, because that's the way you got to start if you want to start. It's just a fact.
It's like
my end goal though is to offer the same stuff, the same goal, the same product, financial product, to people at any level. Because what I would really love to be able to do is just take the same level of expertise and apply it to somebody who working with the same percentage of their net worth, even if it's $1,000.
That's what I was gonna say. Because
right.
like it would be awesome if I could be like, "Yo, put my $100 in your hedge fund." It's like, it's not right now. It doesn't.
Well, making 2 and 20 on $100, it's not very good for me.
Yeah.
I'm making $2.
Exactly. It's not worth it. It's not worth it.
It's not worth my time. As much as I would say, heck yeah, dude, I'd love to. But
yeah, and it's like, it seems silly because you're turning down $100
right.
to invest in whatever, but it's like, it's not worth the...
Right. So what I want to be able to do is give people the optimal exposure to this. And optimal exposure to this takes full-time management from people who are professionals, like in many areas in finance and technology. So full-time management, but then it also takes those people to be able to distribute it perfectly, which we believe is sort of an 80-20 type of thing of long-term, storage of what we see as the most valuable long-term bets, sort of. Or I should say bet, but like our long-term plays are 80% of our entire portfolio value, but then we take 20% of it to really extrapolate on the, to be able to take advantage of the swings and to be able to take advantage of all these other, because volatility for, professional traders is your best friend. Because if it moves between $9,000 and $10,000 or $90,000 and $100,000, it's still moving 10%. So if I put 100 in and take it out when it moves 10%, I made $10. Boom. Every time. Whether it's now, no matter where the market cap is at, I can always make money if my end goal is to make US dollars on the back end. But my last thing to people is be rational. You've got to be able to be rational by putting a behavioral analysis over it. What are people doing? Why would they buy this? What problem does it solve? Does it solve a problem that one of these other more tenured currencies doesn't solve? If all of the answers to that is yes, maybe it's a good project. But even if it's the best thing you've ever seen, don't bet the house on it. Don't bet any. And like at our stage, there's a lot of people who $1,000 is way more than 1% of their net worth. Maybe you can bet 5 or 20. It's really about what, because like I can afford to lose. Well, now I can't. But like, when I had more money in this, like, because I've been living off of a lot of my crypto since August of last year, by not literally having any income for the last year, basically, which is, I'm starting to sweat saying that out loud. But like, we're at a stage of our life where we can risk a lot more, but still be smart about it. You know what I mean? But be confident that it is going to be really, really big, but pay attention to it. Like if you're going to invest in something, treat it like you're planting something. Know that the benefit is going to come a long time. You got to water it and you got to give it attention because eventually it'll grow on its own. But you got to give it the time when it's small, and you got to bury it for a little while. You got to give it up. You got to because what happened was people buried their, they put their initial investment in Bitcoin and put it underground, and they expected it to sprout a, huge tree the next day, and they were like, what the heck? And they unearthed it and took it out at the worst possible time.
Exactly.
Exactly. Like, the analogy fits because it's like you took it out right when it was about to,
Yeah. Before you even got a chance to do anything, really.
So, yeah. But that's it, man.
That's it. Done. I'm just kidding.
Blockchain revolution.
Yeah, for sure. Dude, this is a good one. I was going to say, I feel like every time we talk, we can just keep going for hours and hours, literally. Because we're both like forward future thinkers and stuff.
Yeah.
And
get really frustrated at like some more, like I feel like, and it's probably like a slightly arrogant thing on my behalf that I think like I know better than I do. But like, yeah, I almost get like frustrated by looking at stuff and being like, how do people how are we not paying attention?
Yeah.
But the reality is other people are saying the same things about their own niche, and I don't see it.
Exactly.
So it's easy to see, like we all have blinders on to our own environments, but like
you said it, I think in the last one, you were like, either I'm like the biggest idiot on planet Earth, or I'm really like onto something.
Right. And like I know it's neither, and it's in the middle ground. And it's the same thing goes with everything. Like, is Bitcoin going to be the only thing fundamentally change everything? No. Is Bitcoin going to zero? No. Like,
exactly.
It's a middle ground. It's a rational thing. But the best is definitely yet to come. So
that was good. It's a good positive ending note there. If people want to reach out to you, where should they find you or ask you questions or?
I don't know. I mean, I don't really get on LinkedIn ever.
Yeah, me neither.
I don't get on Facebook, definitely ever. I don't know. I guess like I mean,
if you don't want people to send you questions, right? I mean, I don't care.
I'm okay. I'm fine with questions, but I guess like Instagram DM is the best way.
Hey,
even though I feel like that's the worst way for me to reach out to people, but like for me in particular, like that's where I would see it.
That's just where you are. Yeah.
Yeah.
No, I feel you.
Because I've had some people. I mean, had people even from your community like reach out and just say, hey, you know.
That's cool.
But I mean, I'm not going to get my phone number, I guess.
No. I mean, unless you want to.
No, I'm not. If people really wanted to find it, I'm sure they could. But I'm not going to put that out there as a challenge for anyone who's a hacker.
We won't give that value out into the world, the value of Zander's phone number.
Yeah. Because it's super valuable.
Exactly. All right, dude.
My mom is the only one who calls me, so don't worry about it.
That's amazing. Well, dude, thanks for being on the show again.
Yeah, man.
And we'll see you later, everybody.
All right.
Boom. Man, I love talking to that guy. He is so awesome. I always love having him on the show. Anyways, if you're still here, that is a very good sign. That is a sign that you actually enjoyed this episode. And if you did, I think you are in one of two camps. First of all, you're one of the hardcore homies that listens to every single episode. Second of all, you just finished your first episode of the Andrew Deitch podcast and you want more. You're like, hey, I really enjoyed that. So, number one, if you enjoyed this episode and you haven't gone back, listen to the episode that Zander and I recorded back a few months ago, episode 66. It was a great time, and obviously if you enjoyed this one, I think you would really enjoy that episode as well. And also, I think you would enjoy going back to the last episode I recorded with Austin Distel, who is my guest on episode 88. And since we talked a lot about future technology on this episode, I think you would really enjoy it. But on that episode, he shared the story of how his company, Proof, went through the famous Seed Accelerator Y Combinator earlier this year. And that is a 3-month process that culminates in Demo Day, which is where the startups present their companies to a carefully selected invite-only audience. And on that episode, he shared the story of how they reached their funding goal in just 72 hours after their 2-minute pitch on Demo Day. Super crazy story, super value-packed episode for sure. If you're into entrepreneurship, technology, or startups, you're definitely going to love that one. And the next episode is pretty special because this is going to be my 100th upload, which is pretty nuts. 100 uploads is a little different than 100 episodes because I've done a lot of bonus episodes, weekly updates, stuff like that. So as far as full-length ADP episodes, we're almost there. But anyways, it's going to be a very, very special throwback edition of the Andrew Deitch podcast. It's been over a year since I actually recorded this episode that's going to be coming out, but it has never been released to the public until now. So I'm really excited for you all to hear it. But if you want to support the show, the best way to do that is to go to iTunes, rate it 5 stars. That really helps me out. Also, maybe leave a little comment, leave a review in there. I read all of those. Thank you guys so much for those of you who have reviewed. If you're an avid listener of this podcast, you listen to it all the time and you haven't rated it 5 stars, it would really, really mean a lot if you could go on there and just do that really fast. But also, if you want to follow me, you can go to my website, andrewdeitch.com. That's Andrew, DEITSCH.com. And you can find all the links to all my social media handles and accounts. Also, earlier this week, I started doing more daily vlogging. Umama from episode 87, I think it was, she is doing a lot of daily vlogging, and it inspired me to do some more of my own since I'm already doing a lot of video content recently. So I have been posting a lot there. So if you like YouTube videos and vlogs and stuff, go smash that like button. But anyways, if you're one of the hardcore homies that listens to the end of every episode, just know that I freaking love you. Hopefully you have an amazing week. I will see you guys later on for that throwback episode coming out soon. I'm going to try to have it out on Throwback Thursday because that just makes sense, right? Okay. So I will see you guys on Thursday. Bye-bye.
The fact that we were like, no, you can't have nukes. And they're like, wait, but you have all of them. They're like, yeah, but you can't though. It's like, wait, what?
It's like